your children are turned into mindless vassals who now they look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why? $22 million in 3 fucking hours!
There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not.
Would neither go towards the feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. But why?
What's your dream? To go away.
To go away. That's right.
You guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares, partially. I think it's also partially because everyone else is looking at her like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
Boys, GMCG. Man, we're back, baby. Oh, camera's got to focus. What's up? All right, banger stream today, guys. I'm excited. We got a lot going on. We're going to run you through some stuff, some cool stuff going up on the trenches. Elon torching $35 million of pump. What's up, Fumbler? GM. We're going to talk about that, see what you guys think. We'll let you know what we think about it. Interesting mechanics.
Airdrop supply is gone, guys. Why don't you start there? Why don't you start there, Dom?
Sure. Let me give the run of the show, boys, and then we'll jump straight into it. We'll talk about that in a sec. But we got Crafts coming on, who's doing this new bid ask auction, sealed auction thing. Going to get into that. They said, and I quote, a new category of token of equity linked tokens. So we're going to see if they can crack the code. Of course, that's like the crux of this show. We try to figure it out. We've talked to everyone under the sun about this, so we'll see what they have to do. We got AOL coming on as well, talking about their V2. Lots of USD1 drama going on with, World Liberty Financial, like co-founder getting arrested for blow, all that stuff. We're gonna dig into it, mainly on the V2 of the AOL Launchpad release. And then finally, really interesting one I've been trying to get forever, finally landed it. We got Drive coming on, who's an options platform. We're so used to perps these days, and perps kind of taking over. It'll be interesting to see what DRV has to say and why they're choosing options and why they're blowing up. Their volumes are insane. I have some of their numbers in our private chat here, and it's just incredible. So gonna get into those. But before we do, we got to talk Elon. We got to talk Elon and Pump. Here, I'll just pull it up right now. So here is Here's what Carlos has to say. Okay, here is what Carlos has to say. Pop it up. All right. Despite generating $1 million in daily revenue and buying back 36% of supply over the past year, Pump still trades 50% below its ICO price at 3x PS. Programmatic buybacks may help instill trust, and reinvesting 50% into the business makes sense. Would love to see Pump file a TTF, a simple step towards stronger transparency and investor confidence. And I think Carlos is with Blockworks, right? Yeah, Carlos is with Blockworks. So of course they have the token transparency filings, which Blockworks does. People seem to really like those. So yeah. So you guys are going to have the AOL America today. Today we have them on. Yeah. Feel free to comment and let us know why you think they're scammers. But we'll talk to them. We're going to question the World Liberty financial situation. They got this V2. You know, I'm curious with AOL about just all these launch pads coming up, how they solve this deployer issue. But yeah, we'll have them on today. If you think they're scammers, you know, you can gauge that today. But fuck Pump, can't believe they scraped their airdrop. They scrapped their airdrop, right? Okay, so let me get back to this. This is Elon's tweet. Okay, to get into more detail. Today is the turning point for Pump and Pump Fund. I want to give more context to the bigger picture and where we're actually going. Over the past 9 months, 100% of revenue went into buybacks. Basically, no other platform in crypto has done that at this scale. True. However, we received ongoing feedback specifically on the feeling of a lack of trust in the certainty of buybacks and what would happen to the bought back tokens, even in whether the business itself would be here in a year. That was a big concern of ours early on when Pump started doing these buybacks after a week or two. We're like, how sustainable is this? And we never got really clarity on that. So I think finally we've gotten it today. Today we're changing that. It starts with burning 370 million worth of Pump purchases, 36% of the circulating supply removed from circulation forever. Guys, whatever you want to say, that is huge. 370 million. Now, the question becomes, okay, well, we could have taken that 36% of supply, $370 million of value, and airdropped it. Top 10,000 holders could get, $37,000 each, right? So on and so forth. And so people were kind of raging against this. In all honesty, I wouldn't airdrop 36% right now to the market. I wouldn't.
I mean, you're at the lows in your chart. You're gonna people are just gonna sell that. So yeah. I mean, it makes sense.
It makes sense. I actually do think it's probably a good move. This 36% burn now, and that was the question, right? Okay, all these Pump buybacks, what's happening to them? Are they going off onto sexes and then just selling them right back into the market? That was the big question. That's kind of what I thought, to be honest. It was Pump's buying back all the supply, but then they're just putting it on centralized exchanges. People can't track it, and they're selling it, right? And so essentially, it's just null and void. Nothing happens. Well, today, they burned 36%. So the question is, should they have airdropped it? I think no. And here's why. Because, and I'll just keep reading this, but that isn't enough. We've also allocated 50% of our next year of revenue to programmatic buybacks and burns. No more uncertainty for those who believe in us. So that being said, they have a smart contract now. 50% of revenue will instantly be bought back and burned. Okay, nice. At least we have clarity. Yes, it's not 100%, but 50% adds up over time. If they take 50% of the programmatic buybacks and burn them, and 50%, and then in a year from now do an airdrop. I know people a year from now, that's scary, but hopefully the market's better at that time and they can do a pretty meaningful drop with a lot of the supply that they're accumulating. They also have, non-circulating supply available, right? It's a 1 billion traded token, but I think 3 billion fully diluted value. So they still have tokens they can give out. It's 377 million. I guess if you think about it in a roundabout way, they can burn 36%, but if they emit 36 or 35% in the future and airdrop it, it's like, okay, what really happens here? We burned some of the fully diluted value, but also got an airdrop. Airdropping would have been stupid. Yeah, I mean, dude, you think Pump's looking bad now? If they would have airdropped $370 million of supply, 36% of supply onto a grieving, starving market, these guys would dump it to oblivion, dude. Dump it to oblivion. So no. Just no. Why not 100%? This is the obvious answer here. And this is what I was confused about for the longest time. This is why I was questioning 100%. The short answer is the business simply needs the other 50% to grow. A large treasury gives us flexibility to make big bets over the next 5 to 10 years. And 50% of ongoing revenue enables us to build better products, infrastructure, and reinvest into the ecosystem. I'm extremely confident that 50% of the business we're building towards will dwarf 100% of the business we have today. I mean, so that's the pump update.
I'd love to see them use that other 50% of revenue to put into charts on their eco, some of the bigger ones. You don't think so?
I do not want to see that. No. I don't want to see artificial. I don't want to see more artificial manipulation for pump. It'll drive people there. It'll artificially pump prices. In this market, it's just going to be faded, right? So if they go and drop $1 million into,
so there's no way that would ever, having some of those charts perform well, there's no way that would ever help.
I'm not going to say there's no way, but in this market, it's tough, right? So think of Swarms, for example. Now, this is one that was bottomed out at 6 million for a while, looking really good. Again, we covered this on the show not long ago, and it's been up since. But Swarms, I believe, is a pump fund token. Okay. Now, maybe not Swarms is a good example because people are clearly buying and holding this, but 99% of their other charts that are leaders, if they went and put $1 million into it, the holders that were just seeking exit liquidity and waiting for it are just going to fade it off. So they're just going to be lighting $1 million on fire.
Then they'll have capital.
Then
they'll have traders? Capital. The traders will have capital.
So you're saying traders should use pump fund as exit liquidity, have the capital, and then go and trade.
I don't think it's a 0 or 1 kind of situation. I think that you can have ecosystem charts do well, and you can buy them and just say, "Hey, look, we like our ecosystem. We're gonna buy it."
Yeah, I'm generally in the against criming up charts camp. I like.
No, I'm against criming up charts. I don't think you need to crime up a chart, but I think if you put liquidity back into some of those big community loved plays like Neat and some of the other ones, I don't see a problem with that. Just gonna counter your view on that.
I mean, hey, whatever you say. I think it's lighting money on fire though. All right, let's see what's up with the chat, guys. We're gonna also talk a little bit here in a second, and we got 1 minute till we have Crafts coming on, so that should be
I got a couple things I want to, so let's get off pump here because I think there's some more interesting things. Just some highlights out of the hype hood comparison. Saw this floating around yesterday. Obviously, the quarter-over-quarter numbers are down 0.25% across the board for pump. Same thing with Robinhood. The two things that stand out, really 450% quarter-over-quarter RWA equity revenue, which is really exciting for Hyperliquid. And then the second part is just the multiple premium that the stock market places on something like Robinhood at a 54 times earnings versus Hyperliquid at 30x times earning. And the third interesting thing to keep an eye on is cumulative users are growing 30% quarter over quarter on Hype. So that's pretty significant growth. So just, context for Hyperliquid, it looks good. And on the Galaxy Digital, I listened to the earnings call. They had converted all their L2 and all their liquid tokens to Hype, which I thought was extremely notable because Galaxy is one of the largest treasury asset holding companies. So crypto asset holding companies. The other last thing I'll share real quick is back to this PMX thing. Okay. So we saw Kalshi close a $22 billion round today. I've gotten a little bit of clarity that they are actually, in fact, working on some stuff on PMX. Now, I'll caveat this with, I have no idea if it's a better product than it was. The first version was not very good. But apparently they have solved some stuff for V2, but I have confirmed that there is something going on here. So do with that what you may, but if it does come out that it is a significantly better product than they had the first time, there might be something there to keep on a watch list. That's it.
Yep. Sorry, I was putting out a tweet about today's schedule. Josh, can we send out the links to everyone joining today? But guys, with that said, we're gonna jump right into it. I'll chat with the chat real quick. Yeah, Oogle scammed many people. Drew, look, dude, what are you doing? You're a grown man coming on talking about Oogle scamming people. Look, you can accuse someone of scamming, but tell us what happened, bro. Like, I'm not gonna sit here and read this, and like, I'm not gonna feel sorry for this. This is the trenches, bro.
No crying in the casino.
If you can't take the heat, get up out the kitchen, bro. So unless you can drop a reason how he scammed you and like what they did that was, I guess, scummy. Okay, cool, do that. we're all ears, but like coming in here with this comments, retarded, bro. Retarded. But we'll have them on. We'll see today. I don't know what kind of scamming they did. It seems like their launchpad just to date hasn't been very successful. Call that a scam.
Yeah, I think that definitely has been the case here.
Nonetheless, what else do I have? Oh, this is pretty cool. So Printer, within 24 hours, closed $2 million for their round. I believe it's seed round, because I think they've had a pre-seed, if you want to call it their seed round, or you can call it their just community sale. But look at this, boys. Pretty cool stuff out of Printer. And again, I'm like a little surprised this filled so fast, to be honest. $2 million committed in less than 24 hours. The print community sale is fully subscribed. Pro rata is now active. Every commit gets the same proportional share, whether you're early or late. Window stays open until May 1st. Okay. So this is going to remain open until May 1st, and they'll pro rata it out.
If you go to that website, is it similar to MetaDAO, where it's like based on your size, commit size?
Yeah, 100%.
Okay.
100%.
So there's going to be maybe some whale games there at the end, I'm assuming.
It's a good point. I wonder how people treat this. Again, it's only 4% of supply for sale. April 28th through May 1st. So we got, little bit left. 1 day, 20 hours. 2.1 million has been committed. 451 people have committed $2.1 million. So, again, in this market, to fill out a raise at a 50 million market cap is pretty impressive. So, good for them. But I'll digress. Guys, we are going to pivot here into the craft segments. Just want to take a moment to shout out Trojan for sponsoring the show. They are the best trading terminal you can trade on, best cash backs. Obviously, as a trader, you want to keep the most money, so you guys can do this at trojan.com/@MCG. And without further ado, got to get my boy on here, PFO legend, Twitter legend. What's going on, buddy?
Hey, glad to be here. Thanks for the invite. Good to see you guys. Everything's going well. Just preparing a few things with an upcoming release. Pretty excited about it, and thanks for having us here.
Dude, absolutely. You've been doing some of Media Blitz. I was prepping a bit for this episode, and I think you were on 11 a.m. yesterday, the day before that, like an Acrium ecosystem call. So you guys are full steam ahead, it seems.
Yeah, pretty busy right now. Lots of things going on. I think we need to, it's not easy to get attention nowadays sometimes. So we push as hard as we can to get in right of the front eyes. So I was very excited when you guys invited me. And I think MCG definitely is one of the best ones. And, always great topics on internet capital markets. I listened in before just about the printer sale. So that's also
there we go. Yeah, dude, we appreciate it. It's interesting, the contrast here of all these launch pads we talk about. We just talked about Printer. We talked about Pump Fund right before that. We have AOL coming on right after you guys. You're creating a launch pad, and I want you to kind of explain exactly what Craft is, because it's a little bit different. You said explicitly here, you're creating a new category of equity-linked tokens. A lot of people are trying to crack this. What makes you guys different? And can you explain Craft a little bit to everyone just so they get a better idea of what you're building?
Yeah, sure. I think in the simple sense, we want to give people liquid exposure to growth stage companies. So for us, it's all about sourcing great deals instead of trying to, let anyone launch from the beginning, and then basically have value accrue on the token level by backing it with equity. I think that's the structure that we are going for in the most simple sense. But as well, I think with a launchpad, I think there's two things to it, right? Like it's a marketplace dynamic. So on the one side, it's like sourcing great deals, but on these other sides, it's like sourcing capital. So we're really curated as well on having projects that are interesting as well for institutional deployers. And so having the whole structure set up so that we can have top projects, but also liquid funds and institutional deployers come in and take part in these rounds. Because as you know, like liquidity is a big topic. It's actually valued at a premium. But as you said, nobody cracked the code yet for liquid exposure to growth stage companies.
Yeah, I think why I've been so excited about just some of the people trying to bring equity on chain, crafts, in that category, in that bucket here. Refi is super exciting. We're going to talk about that in a second. But I think I see this issue, and you see all these launch pads come out and try to compete with like a pump fund, and fail 9 out of 10 times, or more like 99 out of 100 times. And it seems to me like the core issue is, you need fantastic deployers to attract fantastic capital. And it's been like a chicken and egg situation where everyone's kind of just reverts back to pump fund because they have all the deployers. In turn, they have all the traders. When you look at Craft, obviously you're taking an approach to more curated, curated startups, equity model. How are you guys thinking about just getting solid deployers coming through your platform?
With deployers, you mean solid projects?
Yeah, solid projects that will, I guess, in turn deploy a token.
Okay. Yeah, I think in that sense, I think we're very gated. So not anybody can launch anything. I think that's like the first section. And then we are actively curating. So actually taking almost the head of a VC and sourcing really good deals that we then bring to our platform at good valuations. I think we can only make this work if we have successful flagship cases at very good valuations that also perform well over, let's say, a longer time horizon. So if we have a good company that has a meaningful path to growing 10x over the next 1 to 2 years, and then this company either being acquired or this company making real revenue, and then we have value accrual in either the exit or the revenue case on token level, I think that's the real aha moment where a lot of people will look at us compared to like someone like Pump Fund. But at the same time, I wouldn't compare myself because we always see ourselves more as like issuance platform for where you can issue a token that's backed by something. So on the protocol level, I would say we're more on the side of you can issue a token that's backed by something fundamental. But as a platform level, I would say we're really trying to curate the best deals, so to say, almost like you had it early on Echo or CoinList.
Yeah, and what do you look for specifically? I think you mentioned, some revenues, the possibility of an acquisition. But obviously, I'm sure you have a team that's in place to do this and scout out the best talent, the best prospects and projects coming through. If you had a checklist, what are those boxes you have to check to be like, okay, this project qualifies to be listed on Craft and go through our process?
Yeah. I think one cool thing that we have in place is basically that we're not trying to force anyone into, a token structure where the whole company now lives on chain. But what we are trying to do is like really focus on partial tokenization. So with partial tokenization, it actually allows us to bring 1 to 30% of a company on chain. And that way, for example, we're talking to AI companies that are interested in filling part of their seed round partially on Craft. So I think this allows us to bring higher quality founders on chain. And then in what we look for in the founders is actually, is this a project that can actually benefit from an online community, like forming an online community? I think early on, proving the model, and especially now that most of what we have seen is actually, a lot of the people that are joining look to like bring something to the table, and mostly it's reach on X. I think just to be plain here, I think a lot of what people can bring currently to the table on the retail side is like reach on X or certain connections. So I think that's why also the founder fit makes most sense if it's an online product or an AI that wants to launch their cloud soon. So I think it's very hard in the beginning to source deep tech deals because I think they don't benefit as much from this online community. So this is also one thought that we had, that our first deals should be mostly consumer focused and benefit from this online community on the distribution aspect. I think that was really important to us. But then as well, I think to make this work, they need to have, in our case, revenue. They need to have a pipeline. So they should already have a product. So they should have an MVP live. And then they should show some early traction and like have a setup, and then in order to benefit from the community, they need to have some experimentation going on around product market fit, and they're ready to scale that up. I think that's what I'm really excited about. And I think all the successful cases that you have seen on the ICM so far have been mostly consumer or applications that benefit from an online community. So that's why this was like an initial focus for us.
Who are you targeting with this? You guys mentioned specifically, there's a quote that says, how you're making everyone a VC. Curious the type of, I guess, investor you're focused on. Is it a more sophisticated investor? Are you kind of seeking liquid funds and sophisticated smart capital? Like, who's the target audience for the products you're releasing, the tokens you're releasing?
Yeah, I think that's a very good question. I think it's something that we still need to figure out ourselves. Like right now, especially as it's early days, it's very hard to like convince these like big family offices to come in. So for now, I see a lot of it being angels, early stage investors that value the liquidity of a token, and sourcing as well through liquid funds. So every launch on Crafts also has a Blockworks transparency filling. So I think just today, Blockworks announced their new round at an 190 million valuation. So they're doing the B1 filling, which is this token transparency framework that every token should fill if they have a clear value accrual to the token. So every launch on Crafts actually comes with a B1 filling and has very transparent tokenomics, which enables us again to adopt the disclosure framework where actual institutional investors will look at the token, either on the primary issuance on our part or then on the secondary markets. I think that's an enabler on the institutional side. But then again, I think one thing, at least for me, the promise of internet capital markets is like everyone should have access to these assets. So retail obviously plays a big role, but we want to, possibly anchor some of these deals through liquid funds or professional investors.
Yeah, and before we get too far ahead, I don't think we even started with like just a high level overview of like what is Crafts. So for the people that aren't familiar with what you guys are building, can you just give a higher level breakdown of what it is you guys are offering and some of the stuff you're pioneering?
Yeah. I think, as I said, trying to give liquid exposure on a high level to growth stage companies, but we're actually starting before the asset goes even live. So what we're trying to do is we launched this discovery platform where you can discover projects early on. With over 140 projects on there, I think we had over 35,000 users on there. And now building on top of that, we're building something where all of these projects can add data rooms. And we're already curating the projects that can add data rooms. And then we have the waitlist live that you just showed on crafts.dev/waitlist, where investors can fill out their investor profile and then get access to these data rooms. So we have around 12 selected projects right now, some of them going live in Crafts this year probably. And through the data room, investors can really do a proper due diligence on what they are investing on, instead of having one tweet on X Live and thinking, okay, I'll put 10K USDC into this. They can really take their time, 3 to 4 weeks, do proper due diligence, or at least have a look at the deck and make an educated decision if they want to go into this deal or not. And after this, I would say, discovery phase, we're also running a roadshow. So we're actually helping these projects get in front of the eyes of investors. So we mapped out basically almost everyone that's currently deploying in the market. So we looked at the different ecosystems. We looked at MetaDAO. We looked at the liquid funds that invest on ETH. We looked at the liquid funds that invest in Sol. Talked to Blockworks. and mapped out who are our initial targets, because obviously at this range that we're currently in, between 500K and 1 million, not everyone will invest into these, because some have like minimum check size of 1 million. So currently focused on this like early stage range, and then connecting the projects as well with these investors, and literally running like a roadshow similar to IPOs. And then when the launch goes live, really want to have like some capital soft committed, so that we know when it goes live, it goes well. And then the project enters into this phase of the sealed bid auction. So we built the first ever sealed bid auction to actually find a price, a market-driven price for these assets.
Yeah, I want to get into the sealed bid auction in a second, but you mentioned a few things that are kind of interesting. You said, you've been speaking to liquid funds who invest on all sorts of different platforms, different layer ones, different blockchains. You chose to pioneer this new category of equity linked tokens on Solana. Why did you go with Solana to, really pave this road here rather than anywhere else?
Yeah, I think for us, it comes down to already being deeply rooted on Solana. So already in 2022, we built the first Dutch auction on Solana. Back then, been involved a bit in NFTs as well. And so really have a good network on Solana and know about the fundamentals, and always been convinced that, Solana is the place where it's at in terms of speed, effectiveness, and also like this whole seed bid auction, for example. It comes down to as well have the right partners that make this possible, that bids are encrypted and you can actually make computation on encrypted bids. And I think that's not possible on a lot of blockchains right now. I think you can maybe do this on Sama, on Ethereum, and that's also experimental. And then the only other option basically that you have right now is either do a proof system that's not really 100% secure in terms of who can see bids or not. So maybe the project can see the bids then. And with Archeum, we have a partner where we can actually run a sealed bid auction on Solana, and they are fully compatible with Solana and only on Solana.
And when you think about this new equity linked token and the type of investors you're looking for, more sophisticated investors, do you think Solana, with Craft, in tandem with Craft, will be the home to a more sophisticated on-chain investor, someone like a liquid fund, like a VC, like angels? Is that the future you envision, or can you kind of explain how you see that?
I think a settlement can happen on Solana, but I think the future will be that nobody actually knows which blockchain they're interactive with. And we think we're gonna abstract that away and basically have on-ramps, off-ramps that are, and I think you see that currently being built out in stable coins and RWA, that a lot of these on-ramps and off-ramps, the cost for these go to zero. So we can finally build applications, settle them on Solana, and get people in that haven't interacted with Solana before. And I think in the long term, we will actually build a layer that we call like the magic SPV layer, basically. So what AngelList started in, like anyone can spin up an SPV and do investments. We actually want to build up this programmable ownership layer where you spin up this magic SPV and you can basically program ownership, have standardized reporting, standardized disclosures, and settle investments globally on Solana. And then maybe you have automatic treasury management. So I think right now, even like in the normal startup world, like a lot of these companies, they don't have treasury management. So they have a lot of idle capital sitting, but they never make anything out of it until probably like Series A, Series B. So like I can see a world where you have this composability of ownership, then we have the other properties of treasury management. So already seed stage companies could like make returns from the idle capital that's sitting, and then so capital becomes productive. And at the same time, if you're doing a follow-on round, all of the disclosures that you need to do, like right now, a lot of it is like Like if you, for example, want to raise a Series A in Germany or in Austria, that's very restrictive. And then if you have like certain seed stage investors, you obviously need to have disclosures. And I think you can standardize a lot of these things and then actually also possibly let your community participate, and they're not missing out because you get the same rights and protections that other investors get. So I think that's the far future that I can see, where a lot of things are settled on Solana, and you can give a lot of people access, and actually makes the whole structure more standardized and more, you can add a lot of features as well. Like liquidity, for example, is great, but like in the far future, I could also see it becoming an optionality. So if some people, if some startups like liquidity because they can gain distribution, or they can gain trading fees from it, maybe it's an optionality that they will add. But I don't see it as like, required, possibly so.
When you saying gain liquidity, is that have a liquid tradable token to represent the equity in the SPV?
Yeah.
Okay.
Yeah, instead of like, the token represents the ownership, but it could also be that this token is that maybe it's transferable, right? But maybe it's not, or has certain transfer restrictions, but maybe it's not, there's no liquidity pool, or there's no order book, but maybe there's just an order book where you can enter orders. So it is liquid, but it's not like you have a liquidity pool that needs to have liquidity over the long run. You know what I mean? For now, I think what we're trying to pioneer is like a model where you have a liquid token, where startups gain distribution because it's liquid, it's tradable. They can earn trading fees from it being tradable. So I think a lot of these properties are nice, and I think it's a strong argument to go into the market, and some of these companies really value that. And I think it's way harder to like go and tell everyone, yeah, okay, you need to now settle investments for our structure because it's standardized, it's easy. It's way harder to come in, do that first, but it's easier to do something first, where a lot of startups are like, okay, there's like this clear value add. And then if this becomes more standard, we onboard the capital deployer side as well, like the professional investors, maybe we can then build a higher level standard as well.
For the non-liquid tokens, would you guys be like an OTC or middleman for maybe people that want to trade the non-liquid tokens? I actually like the idea of having a asset or an SPV that represents equity in a company with a tradable token that's maybe not fully liquid, because I think that does actually kind of target the longer term holders, and it really lets the company develop and go and raise it higher round and kind of naturally increase their value if all things go well. Would you guys be like the middleman providing OTCs for some of that stuff, or not something you thought about?
Yeah, I think we could. I think it's not a focus right now. I think we could have like a order book for that. So add a club for these kind of things to be transferable. But I think this is more like a long-term vision. Like right now, I think for now, we actually see liquidity to AMMs, make tokens liquid. But I agree with you that I think it actually adds something nice, that if tokens represent something, but you're not necessarily targeting people that look for instant liquidity, so to say.
Yeah, it's a really interesting dynamic. I haven't seen anyone really approach it that way, so it'll be interesting to see kind of that come to life when it does end up happening for the first time, or at least the first time I've seen it. But with that being said, you've mentioned a lot of like traditional things. You got the token transparency filing. You have these information rooms with DEX, and all the information you need for access to founders, etc. It seems like you're taking a real traditional approach to this market, and then incorporating kind of the features that the blockchain and Solana adds. Curious why it is you guys are thinking that way. Does the team come from a traditional background? I'd love to get some more information on yourself and the team, because we never really covered that.
Yeah, sure. So we have actually a like diverse set of a team. So for myself, I worked in payments enterprise before. So like a startup working on payments. So that was around 2018. So background computer science. So I know a lot of the dynamics of like raising money, how these venture deals are structured, because I've seen it firsthand, working as a lead developer at that startup. And so then focused very much on research, got into Solana, so wrote the first smart contracts on Solana, and yeah, also seen a lot of the deals and a lot of dynamics that happened around tokens. So I think token value accrual is, not very clear. So that's like an insight that I have compared to like holding equities. I think the value accrual is sometimes way clearer than on the token side, because you basically have something that says how value should be transferred. You often don't have that on the token level, but obviously it can work, like looking at Hyperliquid or looking at other examples where there's like a clear value accrual. And then on the other side, we have Clemens, who's a professional trader on the team. So he worked in professional trading, commodities trading. So he knows a lot of the market dynamics. So always been interested in markets and how markets behave. And we also have Anne, who is mainly working in enterprise. So she worked with a lot of big companies like Axel Springer, Porsche, as a designer, and really adds like this more BD level, high level. How do you like source these deals? How do you find the contacts that you need, and how do you map out the network in order to find the access points? So I think that's an interesting combination, because we have someone that knows a lot about market dynamics, knows how traditional markets work, than myself, who has like experience like working with a startup, having a lot of close friends that work in VC and in the classical sense, and then having Anne, who is more this like enterprise, works with enterprise companies. I think this dynamic together is really interesting, because we know how to approach these capital deployers, and we also know a lot of the dynamics that can go wrong in classical markets. Like I've even seen for myself that you need to even on the safe level or on the equity side, you need to have the right protections in place in order to not get fucked, basically.
Yeah, no, you're absolutely right. And interesting question here from Crypto Jones. We have like 10 minutes. So I'm going to start speed running a few questions. But Crypto Jones asks, what is Crafts doing differently from other launch pads that are trying to do ownership to crypto? And I think to add on to this question, I'll also say, like, we see Street doing this, and we know Kled has 5% of their ownership in an SPV. We see SOAR kind of doing this, and there's 6% of Impulsor's equity, kind of on-chain pseudo equity. Other people are doing this, but the tokens are still trading, for the most part. Pumpcade's Ace Round is doing really well, actually, probably trading above fair valuation. But for the most part, we've seen these trade at a discrepancy to their actual valuations, right? If they go and raise at 100 million and the on-chain represented 100% of the token, typically it's trading at like half of that, or 75% of that. Why are these tokens failing, and why are they not properly represented on chain right now? Is that just the state of the market? Curious what you attribute that to, and how you guys plan to make sure that doesn't happen.
I think a lot of it comes down to transparency and disclosures. I'm not sure if all of these companies have transparent reportings built in. So I think there's not this it's not very clear for people how to value them, right? I think that's one big part. And then what we are trying to do with the stakeholder token standard as well is not only try to back a token by equity, but also standardize this whole reporting and disclosure set that someone can get and access.
Interesting. I guess kind of a follow on to that as well. 84%, you made this tweet, 84% of tokens launched in 2025 are underwater. Retail bought the top again. So why does this keep happening? Mispricing, no matter how you spin it. It's still one of the biggest unsolved problems in crypto. Could you talk a little bit about how you guys plan to hopefully flip the script on this 84% of token launches that are underwater?
Yeah, sure. Am I able to show something here?
Yes. Yeah, we have 7 minutes. So
is that possible?
Absolutely. Let's knock it out.
I think maybe that's easiest, I would say. So what we're doing is like build.
Yeah, sorry. In the next 7 minutes, I want to cover the Acrium partnership, the Refi Hub launch is coming on, and maybe just like what you got going on with the bid sealed auction, and like I know you have this platform up and you have like a test case going. So want to cover those.
Can you see this? Yeah.
Yeah, your screen's up.
Yeah. So basically what we built is the first ever sealed bid auction on Solana. It's actually how Google's IPO worked. So how it actually works is that I think historically you have seen in crypto, right? Like you have these first come first serve launches where like if it's a good valuation, you have snipers coming in, and I think then you had, for example, these normal pro rata launches that we see now, which are usually massively oversubscribed, and then because everyone fights for allocation. So what we built is basically an auction style that's a gold standard in TradFi, and it actually allows a company to issue a token without needing to say, okay, we launched this at 200 million valuation, or we launched this at 100 million valuation, but basically let the market decide where the fair valuation sits. So price discovery happens on the auction and not afterwards in the secondary markets. So how it actually works is that a company sets a min to max valuation that you see here. So in our first case, this will be probably 4 to 8 million. And then, for example, Dom, you say, okay, I bid 5K at 7 million. And then I say, okay, I bid 5 million at 8 million. And someone else bids 5 million at 5K at 5 million. And then let's say the clearing price lands at 6 million. So all the bids are basically encrypted, so nobody can see what anyone else bid. And then based on all the bids, this algorithm that runs on the Acom network basically calculates what's the clearing price where the demand is equals the supply. So then if it clears at 6 million, you and I will be both included, and we both pay the same uniform clearing price. So we all pay 6 million, and someone bidding, for example, 5 million, he'll be fully refunded because the clearing price is over his max valuation. So in economic theory, everyone should bid what's the true maximum valuation, and then you're either included or you're not included.
Got you. So this is kind of the standard in traditional finance. You're doing this to avoid the oversubscription we see in some of these raises, where in the last hour, last couple minutes, people go and play these whale games, bid way more money than they actually know they're going to get filled on in order to get filled on the small portion they actually will. And you're kind of trying to counter that with this new mechanism. We also seen, I think happening on Ethereum quite a bit, was the time decay auctions, where over a period of time, price went down until people started bidding that. Why do these options, like why does a time decay market work poorly compared to something like this? Or why did you choose to go with this model?
I think with the time decay, you still have snipers coming in sometimes. So like someone looking at like what are people bidding. So it's still like, because all blockchains are basically public, there's always someone that can write an algorithm to look at what everyone else is bidding and use that information to find some winning trade. So basically then you always have short-term traders like going into these, even with these like time decays. So in this case, because you don't know what anyone else is bidding, you can't like outbid them.
Interesting. Okay. Kind of on this note as well, I'm going to follow up. We have this refi launch. It's going to be your first launch coming up. Will it be the first launch on Solana to ever use this bid sealed auction that you guys have pioneered?
Yeah. So what we will do in the whole rollout that we have planned, we actually will roll this out soon. So we actually come in the next days, and we're working with a lot of communities around this, is actually the Race Zero. So it's the first ever sealed bid auction Solana, where everyone can participate with mock USDC. So we'll actually have this live soon. Anyone can claim test tokens, and anyone can participate basically. So we will have actually 3 test projects in here where people can also look at, their, test data rooms, and people can as well participate, try out the whole auction mechanism. And we also have like a few prizes for the people that, get the best allocation here. And so this will be the first sealed bid auction that we will ever try with this race zero, so it will be experimental. There might be things going wrong. So we'll try this auction for the first time with participants that we don't know, because anyone can participate. We work with a lot of communities and invite them, like Galactic Geckos, Bonk, and a few others as well. And then a few weeks later, we'll actually have ReFi Hub as the first project go live to ever host a sealed bid auction on Solana with real, USDC, real stable coins.
Okay, two things I want to touch on before we wrap up here. Why did you guys choose ReFi as your first project to be included here? Maybe give us some of the high-level stats, why you're bullish on it, why you're excited for it, and then we're going to get into partnerships after this.
I think ReFi Hub is really interesting because they've been tinkering around in the space for a bit, and they have now 500K solar assets under management. And what is like tinkering led them to is like actually find a way that's scalable in tokenizing solar cash flows and building up a pipeline of really good solar deployers that they have in the pipeline now. So they have over 35 million assets, solar assets in the pipeline. They also right now tokenizing, one live solar deployment after the other, and they already have good returns. So they have an average 12.5% IRR. They have, I think, around 27 distributions. They had all distributions on time. So they have a great model. They now mapped out the supply side. And then they also start soon with what we see now in RWA, these vaults, right? So where you can deploy into one vault and it's distributed behind it into like multiple assets. And they already have a 10 million LOI from institutional deployers into these vaults. And so they really, have the base and they're now ready to scale. So it's an ideal case for us. They also have a lot of trust. They're part of Super Team UK, so also Solana native project, and also great valuation. So they will be going live with a 4 to 10 million valuation, 4 to 10 million as the range. And if you look at comparable solar projects that have been funded last year, they're worth 20 to 40 million. So it's a really great deal. And if they fulfill the pipeline, they can actually over the next year 10x from here. And I think that's a promising future because they have this meaningful path to really grow 10x next year, and they have the things already in place, and they now can really benefit from an on-chain community that can help them fulfill that roadmap.
And we're going to get ReFi Hub on at some point to talk more in detail about this, but could you explain how this works? If I invest on your platform in ReFi Hub, am I investing in the equity of the company, or am I investing in like these projects and then getting emitted yield? Can you explain how that works real quick?
Yeah, I mean, with ReFi Hub, it's basically like this, that they do power purchasing agreements, and then they tokenize these power purchasing agreements, and you directly do a deal between yourself and the actual deployer. So they're actually bringing these contracts on chain.
Okay, got you. So you're going to have an opportunity to invest in the contracts on chain, or is it going to be the ReFi Hub equity through Crafts?
So what they have on the platform is like these power purchasing agreements that everyone can deploy into solar assets, and they will have more soon on their platform. But with the ReFi Hub launch on Crafts, we will actually be for the first time get equity of ReFi Hub of this growing company. So will we actually be able to have an, like liquid exposure token that's backed by the equity. It's not like direct claim on the equity, but it's a claim on the company upside through the vehicle and the legal framework that we designed.
Crypto Jones asks another question. For a project like ReFi, how do you determine just how much equity or ownership is fair to give to the token holders? Is this just a matter of how much they decide to sell, or can you explain that a little further?
Yeah, I think in this case, it's up to the project most of the time. So up to the project to decide. In the first raises, we actually want to have 10% minimum, but it could be future cases where, an AI company that's worth 100 million will only bring in 1% of the equity on chain.
Yeah, well, I'm excited for the conversation with them. Energy is just such a a hot sector right now. So it's a really good, I think, first launch to have coming through your platform here. With that being said, I want to touch on the partners really quick. We're out of time here, but could you tell us a little bit about your partnership with Acrium and then other partners that you're working with just to bring this thing to life?
Yeah, 100%. So we work very closely with Arcium. So we build on Arcium the seed bid auction. We're part of the Arcium Accelerator. I think Arcium is like one of the best privacy projects. They also will TGE soon. So they actually launch a network token, which will be used for the Arcium privacy network. And they actually have a retroactive token grant campaign soon. So by participating in this like race 0 and the refi up race, you also qualify for the RTG campaign on Arcium. So shout out to Arcium. I think they're one of the best projects currently building, basically a layer 2 or a layer that actually has meaningful applications coming to them, as we have seen with Umbra. I think Umbra is like one of the primary examples of Arcium.
Yeah.
And yeah, we very closely work with Solana Foundation. We received the Solana Foundation grant, work very closely as well with few core communities like Bonk, work closely with Radium and Switchboard, and also in contact with Meteora on a lot of things. So bullish Meteora.
Well, you can tell we are too. Shout out Meteora for keeping this show going. So I think we covered it. I'm just going to give you a last minute here to kind of talk through roadmap, vision, what you guys are most excited for at Crafts, and then maybe just leave the people with
30 seconds.
Yeah, 30 seconds, why they should be hopeful about Crafts and how you guys can, change the game for bringing equity back tokens on chain.
Yeah, I think just to summarize, I think this first launch, we're really trying to set the flagship use case with Refi Hub. So make sure to look at Refi Hub, why they're like this new company, how Craft is actually enabling people to get access to really good deals. We'll drop soon a lot of explainers of how the stakeholder token standard works, how seed bid auctions work, and take a look at the race 0 as well. I think will be pretty exciting times over the next weeks. And I think the whole combination of, having an asset that has fundamental backing and value accrual, and then fair pricing it on the other side, I think this combination can be really powerful.
Got you.
Awesome.
Well, this has been a great conversation. We're looking forward to Crafts. I really hope you guys can crack this code. Some fascinating stuff. So we'll keep in contact, PFO, and you always have a Telegram. Have to come back on soon. We'll definitely get Refi on. Maybe you pop in and say what's up again, just for an update then. So we appreciate you and the insights.
Thanks a lot, guys. Thanks for having me.
All right,
Looking forward. See you guys.
See ya.
Sorry, Josh. I hogged it, guys. I wrote a lot of questions for this one, so I'm sorry
No
for hogging it,
worries.
Josh. We'll give you some minutes to give us your thoughts, though. What are you thinking on that?
Did he say more than 10 minutes? I think it was 10% was one of the chunks for this current raise for Refi Hub, but as low as 1% for a AI startup raising at 100 million valuation. I think it was more about the valuation of the company versus the percent of the equity, because obviously raising 10% 100 million is not a lot of companies are going to do that. They might raise a small round
Between 1 to 30%. What was actually interesting to me about that conversation is, of course, like, I am interested in sophisticated capital. I just want upside on good companies. Like, I don't care what Joe Schmo does when he's trading the company. I just want upside on companies. I want to make a bet on the company, not a bet against traders. I think that's the issue right now with a lot of the equity tokens is, or equity S tokens, SPV tokens, is it feels like I'm making a bet against the market. And I want to be making bets on companies, not a bet against traders, if that makes sense. So I actually really like the illiquid aspect he said, which kind of goes against everything we've been standing for on like bringing this equity on chain and making it liquid, but also having an illiquid side to it where you kind of have to OTC or you have more sophisticated investors holding supply. It gives the company chance to really prove its upside in terms of, okay, hey, you got in a 100 million valuation. We just went and raised a 500 million valuation. You're up 5x, or we just closed this massive contract, or company's going really well. And you don't have traders, I guess, PvPing every move there. So interesting conversation, but yeah, I think it's fascinating. We'll see how it goes. Crafts. What I would say, guys, is at the very least, what you can do for yourself is go participate in that 0, the first ever bid seal auction test on Solana, just go give it a try. See how the mechanism works, so you know how you use it and how things can go. I think what's interesting about these new primitives is we've seen this when people are largely unaware of them and there's little participation at the start. Not saying that's what's going to happen with craft, but like you typically do have an edge, right? So it's plus EV to know what you're doing before going into it. So give it a try. It's play money. It's testing. So and of course, what you can also do is use Trojan. Go to trojan.com/@MCG and trade with us to get up to a 50% cash back. It's the best in the industry. Here, let me give you a little Trojan cheat code, guys. Trojan has daily streaks. Now, Chill has won the jackpot twice now. I don't know how this guy's doing it, but he's won the jackpot twice now. And every day they have a gold jackpot. You can enter in with gold and win. So he's won like a couple $1,000 from this. But if you want some alpha, download Trojan and just every day make a little swap. USDC to Sol, just a little swap. You'll get a daily gold streak, and you could use this gold to enter in their jackpots. And Chill's won like thousands of dollars now doing this. So it's a little life hack. It really compounds fast. So like you really compound the first month. Just a little cheat code for y'all if you want to test your luck. It costs like basically nothing to make a swap every day. With that said, I digress. We got AOL coming up. Drew, can you please grill? We will give AOL a fair chance to make their case on V2. Look, we're going to bring up World Louis Financial and what World Louis Financial has been up to, and yeah, we'll give them a fair shot to make their case. And
look, we put it all out there, guys. We put it all out there, but it's up for you guys to decide. But just fair warning: if you keep spamming our chat the same thing over and over again, I will block you. Just fair warning. To be honest,
don't want to get
I'm tired of it.
Side.
I'm tired of it. So just, you've said your piece. Now get out of the chat or listen in.
All right.
Yeah.
Well, with that being said, without further ado, we got a Vesper and Mezcal coming up from AOL. Hello. How are we doing?
Hey, thank you for having us on. Super excited to be here.
Hey, what's up, guys?
What's up, Mezcal? I think this is our first time chatting. I know. So I remember meeting Vesper up at Met Dobby for the first time, and people were mentioning Vesper, and I thought this was Vesper from Meteora because we have good relationship with her. I never heard
the only two Vespers I ever known.
I love the other Vesper. She's awesome.
Dude, they're good people. It's they're a good set of people. But you guys you Vesper specifically gave a great speaking segment at Met Dobby. So we're excited to kind of touch on the progression here. But maybe quick TLDR, quick elevator pitch from you guys. What is America.fun? And how are you guys bringing America's launchpad to Solana?
Yeah, totally. Yeah. Mez, you want to go?
Yeah, of course. So yeah, just a little bit of a TLDR. Obviously, we just went live with V3 around 48 hours ago. We've basically tried to find an iteration of like, what is it that the actual trenches need for them to be able to revive. I think it's not a joke. It's not like we're not making this up, but the trenches are like pretty much at a very divided place, and we're basically trying to like unite the trenches at this moment, like trying to bring in like a fair chance for like people to come in and like actually have like a chance to bring in the 2024 vibes, essentially, you know what I mean? So yeah, we went with V2 a couple of months ago, and we noticed that the product that we were trying to bring into life back then simply wasn't something that the market was looking for. So essentially we came up with these two fee structures right here, America mode and crack mode, where we think we give a fair chance to people to come in, or like to devs to come in and to try and launch a token that actually not only rewards good projects, good teams, but also that gives like a good chance for people to, get into these projects and actually be able to support them without them being like blasted on top of their head whenever they buy the token. So yeah, essentially we're trying to bring in a project that rewards good builders and also rewards good communities. I guess me and Vesper are gonna get a little bit more into the specifics with these two fee structures, but yeah, Vesper, do you have like anything you want to add on like what our kind of ethos is at the moment?
Yeah, I mean, I think like we've been building for a long time. Mez and I both started out like as kind of trenches, so like we really understand like the psychology and like everything that kind of goes into things, and we're just trying to build out like the best launch pad that has like the best tools, both for creators as well as like for users. That just makes it overall like a great trading experience. And hopefully bring a little bit back of like some of the magic that we saw kind of in like 2021, 2022 with like some of these like really, really big runners with like super strong communities. And I can't say that everything we've done along the way has been like 100% perfect. We're still like a growing team. We're still like learning from our experiences and stuff, but definitely like we're trying our hardest to just bring back some of that energy and like really make the trenches, kind of like Mez said, a lot more united as a whole, rather than being so like PvP, which it has been, I think, for like quite a while now.
So let's touch on this real quick because I kind of want to set the stage. If the launch pads need to change and the current, I guess, relationship traders and launch pads have and deploys have, I want to really get into your heads and pick your brains on what you think needs to change. But I want to start with V1 and V2 of AOL. Obviously, you're on V3. You said, look, we maybe didn't do V2 and V1 perfectly. Could we do a little post-mortem on just like what we think maybe held those two versions of America.fun back?
Yeah.
Yeah.
Honestly, like I think I can like cover this. I think
Yep.
like so for I think like one of the biggest things that happened in the trenches was when we saw creator fees come into the space. We stopped seeing runners essentially right after that. So we thought like the first thought on that was like obviously the creator fees have killed the trenches. And so for like a very long time we thought that was like the entire ethos. You know what I mean? Like creators should be rewarded in a way where if the token goes higher, essentially they have like a better chance. That's how they should be rewarded, not by like making creator fees. I don't know. In some of our other competitors' launchpads, essentially like the lower the token is, the higher the fees that they generate, and you can see like how market made those tokens are to the point where they're like constantly being pushed down by sales to like hit that like special spot at like around 400k 300k where they're getting the highest fees. So we thought like, okay, let's just try to take creator fees essentially out of the equation, and we stopped giving creator fees to creators. And essentially we noticed that something that we learned very quickly was like creator fees are here to stay. And essentially it's not creator fees that might be the problem, it's how you align them with it's how you align them with the communities and with the creators. So that's how we like finally found the angle from like V1 V2 to V3 essentially.
Yeah, I agree with you. I don't think fees killed the trenches. I actually think it's pretty interesting. We're seeing people don't really mind paying 1-2% fees on their tokens as long as they have access to trade them. I think for me, when I look at tokens, and the big question is who's the next pump fund, right? Who's gonna be able to topple pump fund? And we saw Printer do very well at like taking a meaningful chunk of mind share. So interested to maybe hear like your learnings from that. But I think what it comes down to is deploys, right? It's this chicken and egg situation where you need traders, but to get traders, you need quality deploys. And so it starts there. How do you guys get really good deploys coming through your platform, which will then attract the traders? Because where there are traders, there are deploys, and where there are deploys, there are traders. And right now, if that's all happening on Pump Fund, it's really hard to make that move unless you can really handpick and curate and find great deploys to come on your platform to attract those traders in the first place. Once you have that momentum, that's when things can kind of get sticky and interesting. How are you guys thinking about that?
Yeah, sure. I mean, I think with like getting like specifically like the best creators and stuff to launch, it's like you said, it's kind of a chicken and egg situation. I think Printer did a good job, and there's definitely like a lot of kind of learning examples from there where like they were able to kind of drive like momentum and like the belief that like, okay, like things can actually like move and like with a different system that isn't pump fun, right? And like that's kind of what we're trying to do with like our new launch. We're trying to bring back the same feeling. So like one thing for us is like we really focused on like how can we bring the absolute like best benefits and like the highest fees to creators. And so like I think if you look at like our fees across the board, you can compare it with like every other launch pad on Solana. We have the highest fees right now. And so that's how we're aiming to like attract the best creators. Come launch in America. If your token does well, you'll be able to like, make a ton of money, and like you won't have to sell your tokens as well. You should be able to like make that money off like purely just creator fees. We have a few other kind of aces up our sleeves, I'd say. I don't want to reveal too much, but we definitely have some things, coming in the next few weeks as well that should make things like kind of a little bit more exciting as well for, creators in terms of just building out some of that like tool set that they may need. So giving them the flexibility, right? Like I think again, like part of our learnings, like building kind of the launchpad so far, is that we've realized like there are different types of like token creators, right? Like there are some people who just YOLO and they launch a coin, and like for whatever reason, like that ends up like picking up. People just love the narrative, and like other people ape in, people come in. Then you have like kind of your lower cap deployers, right? Like folks who maybe don't have as much like capital, but they're, looking to kind of grind and build, and they'll kind of maybe like, redeploy like tokens over and over. And that's like the folks we're trying to target with like crack mode. So, we're offering you the highest possible fees for 72 hours, 1.25%. And you guys can go, and if it takes off beyond that, then there's no creator fees, but the fees instead go towards like LP as well as the treasury, which can then like support these tokens with like marketing, listings, etc. in the future, if they like end up taking off and doing really, really well. And then obviously you have your kind of like bigger runners and your bigger teams who are looking to like deploy coins, and that's who like America mode is like really built for. Like that's like the better your token does, the higher the market cap, the more fees you'll earn.
So this kind of brings up a question, and it's an interesting thought. I'm not sure if I have the answer on it, but it brings up the question, what's more important? Is distribution from a launchpad more important, or is earning more fees from a launchpad more important? If I have to float that question over to you guys, if I'm a deployer and I'm trying to figure out where I should launch, hey, America's going to give me great fees, but maybe Pump Fund's the go-to spot right now, and I know I'm going to get like instant distribution from traders. How are you guys thinking about that?
I mean,
Yeah,
I think like just to start off the question is what would the answer be if Pump Fund and America.fund were starting from zero? You know what
Yes,
I mean?
but well, that's not really the question, because that's not the reality, right? The reality is Pump
Yeah.
Fun is Pump Fun, and AOL's rebuilding here with the V3 launching. So maybe take it from that standpoint.
Yeah, I mean, I think that like people don't really go to like the exact websites anymore to trade tokens. Like people are mostly trading them through like terminals or seeing them through
Yeah.
their FNFs. And so like that's not really something that I think like really moves the needle, to be honest. Like we've heard that a little bit, but if you actually look at the data and like where people are actually buying their tokens, like it's not really through the launchpad. So I don't really see that like distribution like argument being like super strong in this day and age. I think there are other like softer benefits that like a launch pad can bring, so if a launch pad is maybe featuring tokens on like their profile, or like if Elon's tweeting about something, or whatever, if people are believing that Elon's like aping into something, right? I think for us, like it's really important for us to just kind of stay like neutral as a platform, and like not kind of show like favoritism, right, amongst different coins. But that being said, we still want to be, as supportive as we can to like the communities that form from our launchpad. So the better they do, the more we can like help them with, different kind of like events, or, different kinds of like marketing spaces, all these different things that, we can go like try and kind of shout out some of the, like the strongest communities on America.fun.
Something I want to touch on real quick is obviously some people feel slighted by V1 and V2. Maybe some of the launches didn't go so well. Now we know this is the nature of crypto. Some things succeed, some things don't. Is there any message for those people, or anything you want to say just about like, these people feeling slighted or some type of way about America.fun historically?
Yeah, I mean, I think it's a bit sad, to be honest. I think there's, I understand like it's definitely like really, really tough to, lose money and stuff. It's kind of the nature of the game. I'm not gonna go and like cry to my bank if my Tesla stocks go down. And so that's kind of how I see it as well. Like with the launchpad, we're just the facilitators. Products come launch, and it's up to, individuals to do their own due diligence. I think what obviously was unfortunate is that we had, our V1, which was like curated launches that we kind of said, okay, these are the guys that we've spoken to. We think that they're, they've passed a few different kind of rubrics. We think they're good enough. This is obviously not a guarantee that they're going to do well or anything. And, most of them did well. I think like most of them went above, a mil market cap, right? And so there are tons of people who ended up making like a ton of money, right? But unfortunately, again, nature of crypto is like at the end of the day, someone's gonna be left holding the bag, right? And so I think like there are some folks who end up, having to, hold the bag at the end of the day. And, but, nature of the game. I'm definitely like a bag holder. I've held so many different tokens from, like 2019, 2020 that are like, completely dead. Like if you guys remember like ordinals, I
Oh yeah,
hold
Oh
like a
god.
ton
big
of those
coin.
ordinals. Yeah, I never sold any of those tokens. And they're like down only, and that's stuff like I, spent thousands of dollars on. But
There are some
again,
wallets that I don't even open anymore because I just don't want to know what those
Have you
assets
guys
are trading at.
have you
But hey,
guys seen
I will
the
say, Dom, just a second, I will say that whether it be Printer, Pump Fun, Believe, any launchpad that's come along here, like there has been projects or tokens on those launchpads that have performed very poorly. And it's just the nature of the game. It's the nature of what crypto is a little bit. And it just is what it is. Like, it's just reality. Like, I think like, and to put it into numbers, like 99.8% of pump launches don't hold any sort of market cap ever, right? After 48 hours or longer. Like it's just, they're all down only. So
Yeah, and frankly, I don't really know the lore here, to be honest. But like trading is a zero-sum game by nature. For someone to win,
yeah.
someone has to lose. So I just had to address it. Obviously, as it's just kind of lingering around here. With that being said, though, you guys have been doing some events recently, and I want to talk more about V3 and some of your upcoming plans, roadmap, etc. Can you guys talk us through just maybe your thoughts on plans for V3, why you think this is going to stand out? You mentioned a little bit, but just delving deeper into that.
Yeah, of course. Well, I think our fee structure like really helps to make a difference. It really helps to push like on new narratives, helps to push on like good teams and actually have like a chance for them to like stand out on the long run. I don't know, like yeah, I guess we can get like a little bit deeper into the fee structures if you guys would like. I think that's like
Please.
one of our like strongest things at the moment. I'll start with like America mode. Essentially, as we were saying, some of the other fee structures with like the other our other competitors reward devs for having their token be at the like lowest point possible. Almost like they get their highest fees at like 300 to 400k. With us, the higher the token goes, essentially the higher that the fee structure is allowing you to get the creator fees. So imagine like you are able to keep sending your token higher and higher and higher, and you can actually pay for the entire team that you're like. All these tokens have such a huge expense list. Whenever you're working with them, you gotta pay for centralized exchanges, you gotta pay for teams, you gotta pay for the marketer, you gotta pay for the KOL managers, you gotta pay for the KOLs. It's like a really such a huge expense list for whenever these projects are going out. So imagine they don't actually have to sell their tokens in order to be able to like keeping up with like the entire projects, the list of expenses. You can actually like just cover it from like the fee structure, from like the proper fees. As Vesper was saying right there on the screen, as you see right now, at over 10 mil market cap, creators are going to be getting like 1.10% of fees, which is essentially one of the highest creator fees across the entire market. And then we have crack mode, which is like quite interesting one as well. I think if you guys remember back in the Pump Fund 2024 days, most of the tokens that actually did great were all CTOs. Like you guys remember Fog. I think Popcat was a CTO as well.
Yeah.
The Fartcoin is quote unquote a CTO as well. So the way crack mode is, like, people get to deploy the token, and for the first 72 hours, they get to get some of the craziest fees there are. So essentially, we're just pushing people to, like, instead of launching on another platform, they launch with us. But then the script shifts a little bit after 72 hours, where a high percentage of the fees actually starts going to a liquidity pool, and it allows the token to actually subsidize and actually like live and actually have like a chance. Most of the tokens on all these other launchpads like really don't have the liquidity for them to like be able to like grow and actually have a chance. Here, they actually have a chance within like 72 hours to have like a super strong LP, the community to be able to CTO it, the community to be able to, and there's no fighting for creator fees, because I think like if you guys go back a couple months to like to Ticker Penguin, there was like an entire situation of like who the actual CTO was, who actually launched the token. Somebody launched it before. Da, 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 da. Now it goes all back to the community, and there's no fighting for these fees as well. It's just like going straight to the LP, making the token stronger, and it allows people to like actually be able to ape it with a little bit more volume, have people exit the token without necessarily like blasting it to zero. So yeah, we think we have a high chance to bring people a good opportunity to like, I don't know, revive the trenches, unite the trenches a little bit. So yeah.
So if I just to pause on the screen here, Dom, I don't know if you can pause it, but so for the first 72 hours, there are fees, which is where the lion's share of volume is on all these kind of new launches. And then they drop to zero, but do they go back up if it gets back above 60K and then so on to these different thresholds? Do I understand that correctly?
So no, this is America mode. This is
okay. These are two modes.
Yeah, there's two different modes. There's crack mode and there's America mode. Let's say like the America way, the higher the token goes, the more fees that they are able to get. And then there's crack mode, which is the one that's like only for 72 hours. And it's more like a degen at the beginning. People can play around with it. And essentially like it becomes a little bit of a higher, it essentially becomes a token that gets rewarded for like the more trading fees it does is after those 72 hours. So they're both aligned in the same way. But I don't know, this way we at least allow people to launch those tokens in this launch pad, and then essentially eventually they have a chance to like actually go higher, build a community, build an LP pool, all these cool things.
Got it. In our last chat, you talked about staking. I see you still have that 25 bips staker rewards. Can you just talk about staking? And one interesting mechanism we saw at Printer was that you could actually stake the meme coins themselves. I don't know what you guys think of some of those staking mechanics, but would love to hear your thoughts on AOL staking.
Yeah, I mean, to be honest, like we actually thought about like Printer's mechanic a while ago. It's something that we discussed internally and thought, okay, maybe this is like a option, right? But what we kind of realized was it's not sustainable, like especially if you're, an OG and you've been around the space for a while, like that staking is like kind of a bad idea, and most people after a period of time will realize like actually they don't want to stake like ultra low caps and like kind of random tokens. I think if it's a utility coin, kind of like the AOL token where there's some kind of rev share, that's a different ball game. But if it's just like a random token that you're staking just to generate fees, yes, that's great if like the token is up only and if it's driving a ton of volume. But then the moment that dries up, then you're just staking your tokens, you're not able to sell, and then you're not actually earning any revenue. And so I think that's kind of what we're seeing at the moment with like some of these printer coins. I think I saw a tweet of like, I locked up all my tokens, but I only made, $7, whereas like I missed out on the opportunity of like being able to sell my tokens for like, $1,000 or something like that. And so I think that's something that, the market is realizing and will eventually realize. And so for us, it just made way more sense to actually like shuffle like kind of some of the revenue towards like AOL stakers who are here for the long term, and those are different kinds of investors. Like, there are folks who hold the AOL token and stake it, but never trade, tokens in the trenches. That's because they're looking for, kind of a longer term utility project that, has some kind of revenue like and like dividend payout. And so yeah, we're trying to target like different kinds of investors. Then obviously if you want to do your ultra low caps, you can totally do that. But yeah, it's just a different kind of model, I think.
Yeah, I agree.
I think we're happy with where we're at. Yep.
I agree with that. And what we saw with the printer staking was it ended up being gamed in the end, where like people would stake like a large percent, like 85%, and then they would basically bundle the other 15%, and they were just selling that bundle or unwinding that bundle at like a higher market cap because it was trading, with all the liquidity coming in, which ended up it ended up not working basically. And I agree with you too in the, you don't want to stake ultra low cap tickers either, but yeah. So it's a valid take. You want those economics flowing to your AOL community. I understand that. Sorry, go ahead, Mezco.
No. All good. I mean, I think like a lot of people don't remember that like NFTs did this type of staking like a very, very long time ago. And I think like a CyberCons or whatever, they did like stake your NFT and get rewards. And it was like I mean, this was a meta that was 4 years ago, and it lasted like 6 months as well. You know, like this is the first time that we see like liquid staking like this, or liquid staking like this.
Yeah.
Yeah.
Go ahead,
So one
Tom.
thing for me, I just keep going back to this, and I see you have this video up. You guys are at the Solana Skyline, kind of working, doing BD. You know, when I look at the perspective of a deployer or someone who's going to launch a token, man, it just feels like they're flooded with so many options, and it almost feels like launch pads are so saturated. You know, how do you choose where to go with? Do I go with America.fund? Do I go with Pump Fund? Do I go with Printer? Do I go with Sword? Do I go with Street? Do I, you know, and the list goes on and on and on and on. And so I think it still is important to get boots on the ground and do this meaningful BD and talk to these good founders and people like innovating on the front lines of tech. How are you guys thinking about that? Are you reaching out to founders individually? Like, what's the strategy here to, I guess, attract meaningful deployers outside of just the fees you guys set up for them?
Yeah, I mean, for sure. You know, before crypto, I was in kind of a more traditional industry, and like that's pretty much how deals get done, and like nothing has changed, right? I think at the end of the day, it's like, does someone like you? Like, you know, if you're standing in a room, do you get along? And like, yeah, you know, if I like someone, I'm more likely to do business with them. I'm more likely to enter a partnership, you know, and that's kind of what happened with the Meteora guys. I mean, they have like great tech, you know, regardless, but like at the end of the day it was like meeting these guys in person and
Mm.
realizing like, oh, they like their values and their ethos like aligns with ours. Like they're long-term builders. They're looking to build out, you know, great tech. They're nice people to get along with, not scummy. Yeah, I want to work with these guys. And that's kind of how, you know, I've been approaching and Mez has been approaching and the rest of our team has been approaching, you know, like all these different conversations. Like, yeah, like we just want to build good relationships, show people that, you know, we're genuinely like, you know, long-term builders and looking to build something that, you know, helps support them as much as like, you know, we can do. And I think that's kind of how we're, you know, just trying to build traction, right? You know, it takes a lot of like kind of like door-to-door sales in some ways, like I think with starting a new product, and that's, you know, inevitably how you end up getting traction. You see all these kind of new like disruptors in like different industries, right? Like if you look at, you know, Venmo, and if you look at PayPal, like all of these guys started off boots on the ground with like, you know, one-to-one conversations, with like literally, you know, knocking on doors, like small referral programs, that kind of stuff to like get traction. And the moment you hit like critical mass, you know, that stuff doesn't matter anymore. But before then, it's like, you know, it's a slow grind, but you know, we're here to stay, so we're happy to do it.
I have to say, I like the new website. Traded on your last, I guess, AOL V2. I like the like nostalgia of the computery thing, but this feels a lot more, a little more cleaner. So I props you guys there. I wanted to ask a bit about, I think it was Earn here. You have these different staking duration multipliers. I know we just talked about you know, staking on your platform. You have 14% supply locked. I just want to, you know, call out some of these 6% APR. I don't know if you've done any modeling to see if this APR kind of, you know, has some high points or low points based on different volumes. Does it go higher than 6%, or is it usually fixed there?
Oh yeah, I mean when we first launched, and this totally depends on like the volume that comes into the platform, but when we first launched our permissionless version, I think we had over I don't want to like give wrong numbers, but I want to say it was like over 150% APR. So there were guys who staked and ended up making like a few $1,000s like a day just off like staking, you know. And so some folks, I want to say, even like either broke even on their investment or like got very, very close to it. So there's definitely, I think, like some opportunities there, but obviously it depends on the volume and stuff that comes into the platform.
Totally. And I have to note, you guys have USA at the end of your tickers or CAs. I do like that. That is still pretty cool.
So I want to touch on that. You have USA at the end of the tickers. I think you were the first launchpad to implement USD1 as a stablecoin. You have this America First motto. I guess my question to you would be like, why does Solana need an America First launchpad on their platform? We see what they're doing with their USA office in Miami opening up, so exciting stuff there. But why does Solana need a USA First launchpad?
I mean, you know, why not? America is like the best country in the world. Why would you not want a USA focused launchpad?
Yeah, what's that flag you guys got behind there? Sorry.
That's right.
Yeah, you know what? Funny enough, I actually put this up for the live stream with you guys. I have my Canadian flag, of course, too, but because I am Canadian, but I kept it up there. I haven't taken it down, so it's just been a part of my background since. But yeah, go ahead, Vesper.
Yeah, I mean, I think like to answer your question, I think the thing about America that genuinely is so great, is that you can be anyone and like be from kind of nowhere background. You don't even have to be from America, but like if you kind of come to the US, like you can follow certain steps and like genuinely achieve your dreams, which I think, and I've traveled to like a ton of different places, but I've never experienced like that same feeling outside of like the US. And so what we're trying to do is like bring that sense of like opportunity and optimism on chain onto Solana. And I think Solana is like, it's a very, very optimistic chain. It's like really, really driving like acceleration, growth, like the cutting edge of like crypto innovation. And so I think it just makes sense, like the alignment between, Solana and obviously like America as a whole and America.fun.
Yeah, no, I think that's a fantastic answer. I want to touch on the USD1 situation. World Liberty Financial has been in hot water recently. I think I saw some stuff. I'm not super keen on it. But what's up with the relationship there? Have you guys rethought any relationship there? Are you guys keeping up with the World Liberty Financial situation? Just any comment on that, because I'm pretty much in the blue.
Yeah, I mean, Ogle's still an advisor at World Liberty Fi. We still have like good relationships and stuff with them. I can't comment too publicly, like too much on, what like public perception is on, World Liberty Fi. I personally, still think like the project is great, but you never really know with crypto, right?
Right, right. So you guys are still rocking with USD1? There's no plans to, rock with USDC or USDT or anything else?
No, I mean we're very comfortable with USD1. Right now I think it aligns with our vision, and so we're, it's obviously like an integral part of our launchpad. So yeah, we're sticking with it for now. But who knows? Maybe things will change in the future. But I never want to say never. But right now we're very, very happy with like our relationship with them.
Got you. Okay, cool. Yeah, I just want some more information on that because I've been seeing the stuff on my timeline and it's been from a distance. So I just wanted to kind of get your thoughts on that. Gonna give you guys the chance to talk a bit about roadmap here. You've launched V3. What comes next? What happens next? What are you guys internally working on, excited for, etc.?
Mez, you want to go for it, or you want me to take it?
I think you're like some of the new ideas that we were working on were like Vesper ideas. So like I really want to like I think you can like shine on those a little bit harder than me.
All right. Yeah, I mean, I don't want to give too much away, but like I said earlier, we're really just trying to build out like the best platform for both creators and traders. So I think, launch pads have historically focused on like creating the best UI UX for users, which I think is great. But I think there's definitely a gap in the market for good products and good tools for creators, which I think we have some pretty innovative ideas regarding that. We're still like in development, so give us some time to release and push these products. But hopefully, we can really bring those products to light and like become really the best place for creators, which again is like another value add, another reason that we think creators will come to us versus the other launch pads.
Mezcal, you want to add anything to that, or that suffices?
No, I think that suffices. I mean, yeah, as Vesper was saying, like we're here to stay in the long term, and we really got some really cool ideas. And essentially, we just want to make it the best place for anybody to come in and launch whatever it is they want to launch. We want to be the America of launchpads, right? Like anybody can come here, like to be the best at what they are trying to be or trying to accomplish, essentially.
Great. Let's give the people some alpha, maybe something to look forward to, something maybe a little more actionable and tradable. First and foremost, any new launches in the pipeline that you guys can touch on or mention, or how can people be paying attention for this?
Yeah, I mean, obviously stay tuned, check out our website, check out we have a new like ecosystem account where we're essentially showing off kind of the best creators, traders, and all things like America on it. So it's america.news is the account. And so yeah, check that account out. I think again we're trying to stay neutral as a platform. I think we've definitely learned our mistakes from our kind of V1 where, we had our curated launches, and we don't want to be kind of like the source of blame, I guess, when things, maybe like don't perform as well as like people might anticipate, right? So I'd say, check out our platform, use your own like tools, use your own information, and yeah, there should be some fun stuff coming up. Yeah, just, check out the platform, do your own research.
Yeah, I think we kind of take the same stance as most of these launch pads where it's like, us at MCG, we have a whole host and variety of people on, and we're not here to be the arbiter of truth. We're just here to, share that information and let people decide what they want to do with it. So, I'm assuming that's kind of the similar idea here with this America Fun News platform you guys have.
Yeah, precisely. It's just like to showcase a little bit of the cool information that some of these projects have done. None of this is like financial advice, or we're not trying to like say like buy this, buy that, but we're just trying to bring in like a little bit of opportunity to showcase these projects. There's obviously like a thin line of like what we can say, what we can cross, and we obviously want all of our projects to do well. But yeah, as we learned from V1, V2, like there's obviously needs to be like a line that can be crossed, and so we're gonna try like showcase as much as possible from like the projects that are here to do something good, and yeah, hope that everybody has like a good experience being like either a trader or a launcher.
I think this conversation has given me a pretty rounded perspective on everything here. I just guess we'll close off with this then. You have this AOL token out. How should the people be looking at this token? Is there some value accrual mechanism to it? Just anything on the AOL token?
Yeah, so I mean, the AOL token is kind of our flagship token, right? And so like for those who don't know the lore and the story, the AOL token came first. That was launched as like kind of a test token on Bonk many months ago, I guess, by Ogle. People end up copy trading. Token ended up sending up to, I think it was like 5 mil at the time, and then up to 40 or whatever. And so we built out the launch pad around that token, and so have been just trying to drive value to like token holders for a very long time now. And so as part of that, we're giving away 0.25% of every transaction goes, like the revenue goes directly to stakers. So depending on the fee mode and depending on the different market cap of the token, that could go all the way up to 70% of like the net treasury revenue. So it's significant amounts, and that's how we're aiming to drive value for the AOL holders.
Love it. All right, guys. Anything we didn't cover today that you want to touch on, or a message you want to leave the viewers and people with today?
No, I mean, I think, just check out America.fun, check out the different things that, is going on. I'd say like, if you've kind of, written this off for over the past few months and kind of thought, okay, there hasn't been as much stuff going on, give us a second chance. I think you might be surprised. Yeah, I think there's a lot of new things coming soon. So yeah, I wouldn't underestimate us.
There you go. Mezcal.
Awesome. Good luck, Vesper. Good luck, Mezcal.
Thank you. And thank you for having us on. It's been a pleasure.
Likewise.
Yeah, absolutely, guys.
We'll check back in a few months. See ya.
Best
Take
of luck.
care. Bye.
Bye.
All right. There we have it. That was the
Man,
AOL
chat.
squad.
Guys.
Hey, though, you know
Guys,
what? This might be the most chatty chat.
The most chatty
in
chat
history.
we've ever had on
So
MCG.
Metrics might be looking good from it. Look, guys, it is a market where someone's got to lose for someone to win. If you guys felt like you got slated by AOL, I'm sorry to hear that, but you gotta make your own decisions in this market. I think that's one thing MCG tries to push. It's look, we're gonna have anyone on the show who's willing to come up here and share their piece. And look, I'll much rather have a team come on who's at least willing to speak, even maybe in more turbulent times, rather than someone that's gonna hide away. And I think that's a testament to something, right? Yeah, at the very least. So nonetheless, that was America.fun. We'll see how they do. Going to keep an eye on them and their platform. Do due diligence on all your trades, guys. But thanks for all the chats. I think we might be setting a new record today because of it. So, but nonetheless, I digress. We have Derived coming up next. This is a really interesting conversation. One like I have been trying to have for a long time. So really stoked to get them on here. Yeah, they've been crushing it. Their numbers are going up. Their metrics are going crazy. They're kind of competing here, or at least seemingly going head to head with these perf platforms. And I'm not seeing many options platforms do this, or any for that matter, other than Derive. The numbers speak for themselves. The product speaks for itself. We're going to get into it today. Hopefully, get some alpha and maybe introduce you guys to a new product you are maybe unfamiliar. Now, we've talked about Derive a bit on this channel, but without further ado, let me get Cassette on. It is 4 minutes before her time, but if she's ready to go, we no need to wait on it. So I'll pull her up. Let's just test the water here. Cassette, are you with us?
Hey guys, how are you?
Doing well. Pleasure to chat with you. As you probably heard prior to getting pulled up here, we're very excited about Derive and what you guys are doing, as I'm sure you guys are very excited. I think the numbers recently have been validating, so really looking forward to touching on that a little bit. But Cassette, would you do us a favor and kind of share a bit about yourself, your background? You're head of partnership here at Derive. Could you tell the people a bit more about yourself?
Yeah, thanks, I guess, first off, for having me on. Excited to be here. So yeah, I'm Cassette. I am head of partnerships at Derive. So I work with all of our market makers, funds, traders, protocol integrators, things like that. My background is actually in option market making and trading and risk management. So I actually came to Derive first as a user. So I worked at a prop firm for a number of years. I traded all kinds of different options products, including CME Bitcoin, and joined starting to try and trade on the platform, and ended up joining instead. So it's been a fun journey to get here, but by now I've been at Derive for about 5 years, so it's been a eternity in DeFi, I guess.
Yes.
Absolutely. The first thing that I just really want to touch on is, options. Most people are used to perps these days, at least in the crypto world. I say most people, but this is, I think, more of an exclusively crypto thing. Why are options something you personally traded and you think maybe deserve a little more attention?
Yeah. So perps, first off, are a fantastic product. They're great for retail. I think that at a certain scale, they become not suitable instruments for hedging purposes. And so when you have, real world use cases of people that want to hedge a portfolio, perps only work to an extent because they have a path dependent outcome. If you're right but wrong on a short time frame, you can get liquidated quickly. And there's also no necessarily guaranteed convergence on a time frame. So, perp funding obviously helps a ton to bring things back in line, but there is no guarantee that, if you need something to be a certain price by the end of the week, you could be at a premium or a discount, you could be paying a massive amount of funding to get there. There's just a lot of uncertainty around it. With options, completely path independent of how you get there. You can get really convex positions where, and big leverage on the options as well. And you can put together many different payout structures other than just, a linear up or down. You can express views within a range. You can express, multiple views like up in this range, down in this range. You can also put together, structures like lending products and things like that. All of which you can't quite do inside of the perp environment.
Interesting. K-Set, so you were a trader originally. You came to Derive to try out the platform. Loved it. You got picked up by the team. Could you give us a little more information on just the people pulling the strings in the background of Derive? Who's on the team, kind of the brains behind this, more so other than, we got your introduction. So now let's hear about the rest of the team.
So we have a great and a really stacked team of people. I think, a lot of times in DeFi, you think of degens and Derive. That's certainly not the case. We have a lot of people with a ton of industry experience. So, myself, I have a trading background. Nick, one of our founders, was a trader at Susquehanna on equities. We have founders from Synthetics, from Facebook. And then inside of our team, even, we have people with math PhDs. We have people coming from Apple, from banking, from, again, Facebook. And then we've actually picked up, as over the last few months, a new head of product. Hitesh is doing the Lord's work on the product side. He was former head of product at Paradigm, the OTC network, as well as Andres, who is our chief marketing officer. He was former chief marketing officer at Deribit during some of their really high growth years as well. So, we have a really stacked team with a lot of institutional, and derivatives experience across the board.
Love it. That's great, Laura. With that said, let's kind of jump into more of the product here. For the people that are unfamiliar with Derive, for the people in our chat, maybe the community, whoever's watching right now, what is Derive?
Yeah, so Derive options are really the core of our business. We've been in the space for 5 years now, with options being really at the forefront of our product. Right now, we have options on ETH, BTC, Sol, and Hype, and we actually just launched Cardano options. We offer perpetual futures on the same set, as well as a handful of other perpetual options. You could look at it maybe as a short list of things we might want to launch options on if you're paying attention. And then we offer portfolio margin on these assets for options, spot, and perpetual futures. We accept over 20 different forms of collateral. So we've seen, things like wrap stake ETH being very popular. We also have Hype and K-Hype enabled, Sol and Jito Sol. So lots of different choices to put together, really like any payout structure that one could imagine.
You mentioned a few different things there. Could you kind of just go into some of these products and break down a little bit more individually on what some of these actually do and are?
As far as like what options are, maybe?
Well, I mean, you mentioned hedging, you mentioned a few different strategies in there, and kind of some of the optionality you give your protocol users. Would you have any interest in maybe touching on some of that stuff?
Sure. So on the option side, you can do things like multi-leg structures. So, instead of just trading an outright call option, which is the right to buy something at a point in the future, you can trade a call spread, which would give you a range of profitability from your first long strike to your next short strike. The opposite is true of a put spread. So you can trade all of these through the RFQ platform. You can get into more complex structures like butterflies, condors, ironflies, which are multi-leg strategies on the platform. And then you can pair those with a hedge position on the perp side and gain more capital efficiency that way. So, not only do we have people using the perps to create capital efficiency in their portfolio, you get risk offsets for, up and down spot shock numbers, but you also are able to use the perp instruments against the different forms of collateral to create other payout structures in addition to what you're doing on the options. So we have people that will do things like deposit wrap staked ETH, short a perp, and hold a basis trade as, collateral for their options trading positions, to earn extra yield. Those are pretty cool. You can borrow USDC at a floating rate in the system as well against all these other forms of collateral, and continue using them for trading on Derive.
I want to ask about just the on-chain versus, kind of more traditional options provider like MetaTrader and stuff like that. Is there a benefit to having more on-chain options products?
Yeah, I mean, for us, we definitely think so. I think we as a team really are trying to lean into the efficiencies of being on-chain. We're at a point now where we can iterate really pretty quickly. In our first days as Lyra, it took like 6 to 8 months if we wanted to upgrade the protocol. And now if we want to launch a new market, it's really like a few days to a week's time turnaround. We're able to operate, in a very, very lean way because we outsource all of the clearing infrastructure, settlement margin calculations to the blockchain. And it also creates a lot of transparency and around what people are doing. It's self-custodial, so we can't ever, we can't rehypothecate your funds. We can't double pledge them. We can't, liquidate you outside of the smart contract-based rules. There's definitely just a lot of benefits to being on chain. And in many cases, it can democratize access to these products for people to pull a wider subset of market makers than just, dealing with bilateral OTC agreements.
I used to work in the perps on the early on-chain Arbitrum days, and we looked at options as just like a contract type that, I mean, this is a very retail take, but was like kind of not gaining traction in crypto. And I'm wondering if it was, perps are easier to understand, I think, for retail traders than options are. There's so many different variables when you're putting on a position, but also just like, I don't know if it was the chains were good enough to even build an option position, because there really wasn't many option platforms back then. Is that a true statement? Like, do you find that the blockchains have improved in terms of like their throughput, speed, efficiency, et cetera, to actually make options on chain work better? I don't know if that's a real take or not, but I'm curious.
Yeah, massively so. So I'd love to know, where were you on Arbitrum with perp dexes?
It was a GMX competitor. It used to be called Tracer DAO. So we did like leverage token. Yeah, mycelium. That's right.
Lore.
Yeah.
Great.
Mycelium back in the day. And then, the leverage token thing didn't really work very well. The mechanism worked okay, but it wasn't really what traders wanted. And then, GMX, the liquidity pool as a counterparty model, seemed to actually work as a decent model. But yeah, options back then were just, there's a couple experiments, but not many that actually worked really well.
Yeah, I think, and coming into it from traditional finance, I had honestly a really hard time wrapping my head around synthetics and GMX and all of the AMMs. I think it actually made more sense than anything else with options, which Derive started as Lyra, which was an option AMM.
Yes, when you mentioned Lyra, I was like, okay, I remember.
And it worked, I think, in some respects because options markets are a bit wider. So, than perps. On a perp dex, you have to cross, 1 basis point maybe of a spread to capture an arbitrage opportunity. On options, you're paying much more when you cross the bid ask, but again, you're paying for the convexity and the capital that the market maker has to post. And I spent a lot of time being like, well, I don't understand. How can they offer all of this liquidity at spot price and not get run over? And as it turns out, they were getting run over, as you probably saw at Mycelium and Tracer DAO as well. I think at any point of scale, the AMM model becomes somewhat fish food for the high frequency traders of the world. It's always going to be retail in the AMM versus probably professionals that are interacting with it. As far as like the chain, we've always been, somewhat at the forefront of the tech stack because options are so computationally intense. It's really necessitated that for us. So we were the second protocol to deploy on Optimism after they launched. It was never going to be possible for us to build Lyra on an L1. It was just too expensive. Then this version of Derive has been live for 2.5 years. It's a hybrid model. So all of the matching is done off chain and all of the margin, custody, settlement, all of the good stuff is done on chain. And that allows us to do, one performant matching where we're able to have this very low latency settlement and matching time. And then the on-chain component, we're actually now part of the OP stack. So we're our full own chain, and that allows us to get the maximum amount of capital efficiency by fitting as many instruments into a portfolio as necessary, because we need to be able to calculate all the valuations on chain when we go to evaluate a portfolio or liquidate a position.
Can I just double tap into these models a little bit and how they have evolved? So you mentioned the AMM as a counterparty getting kind of run over. I'm assuming you're talking about like arbitraging any of the Oracle feeds if there's any sort of like delay or something. Is that correct, or am I? Because traders were losing to the pools.
Yeah, well, it depends on
over time they were.
Yeah. So I think over time, and it might be a symptom of like when you start as an AMM, as a perp dex, and you have a lot of retail traders, a lot of people that are coming in to, try the product, that may be very profitable for the pool. As the pool, and then like a lot of the high frequency traders are probably ignoring you because you're too small for them to spend integration resources on it. Once you hit a certain scale, as you know, I think they saw it Synthetics, they saw it GMX, like they see it at some of the bigger places. You know, then all of a sudden, I don't want to name anyone in particular, throw anybody under the bus, but you know, then all of a sudden now there's like a bunch of money in the honeypot, and people are starting to pay attention. The high frequency traders come, the algos come, and then they're looking at those split second deviations of Oracle price and, you know, trying to extract value from the pool.
Yeah, and one last thing, and these are, again, this is just to help traders understand what their options are, and because they might not know your industry knowledge. But so what about like Hyperliquid's HLP model? They seems to have been somewhat successful, but how would you think, like when you talk to traders, how should they think about options versus trading on somewhere else like that?
Yeah, so Hyperliquid HLP is incredible because it's not actually an AMM per se. So they do some of their own proprietary trading in HLP that's supporting liquidity on their book, but they're able to dynamically move their markets around, you know, Oracle pricing. They're not just kind of sitting out there waiting for people to come interact. And then they're also, you know, and quoting through an order book, you know, model, and they're also able to take a piece of their liquidations, which is obviously going to be highly profitable. So it's like a great model for them to support their business. What was the second part of the question? Sorry.
Just like how should traders think about trading there versus on Derive?
Yeah, trading on Derive versus Hyperliquid. First off, I think our environment is completely unique to the broader market. We have a lot of because traders and market makers get capital efficiency from using the perp markets, we tend to see deviations happen regardless of what's going on everywhere else. Funding could be one way on Binance, on Hyperliquid, everywhere else, and it's a completely different story at Derive because of the way the option market makers and traders are positioned. Each time that there's sort of a trade event on the options, it triggers a trade in the perps as well. So say there's like a big trade goes through RFQ. The first set is when a market maker has to hedge the trade in the first place. The second is when there's a move then based in the underlying where market makers and traders are going to re-hedge based on their gamma. And then at the third is the expiration. When those options expire, then there's kind of an unwind of the perps. And that happens, you know, in a cyclical fashion, regardless of what's going on everywhere else. We've seen, you know, particularly on Hype, we're actually the most liquid venue for Hype options, CFI, DeFi, or anywhere else. We've had some big trades print through there. And we actually have started to see when there's big moves in the underlying that our funding and our markets and the option trades are actually moving funding on a broader scale on Hyperliquid, on Binance. Like we see it start to leak out to those places, and it's actually super cool to see.
Nice.
Yeah, just a very different environment. I think Hyperliquid has a great product. Honestly, like it's been really great to see their staying power, and it's also done just a ton for the industry to force compliance teams of trading desks to look at and figure out how they can operate on chain and, you know, take a look at the space in general and get comfortable with wallets. Yeah.
Last one for me. I mean, of that era, the DeFi derivatives 1.0 era, I have to say you guys are one of the only people that are still around. And so kudos to you guys for sticking in there and iterating and growing. And, you know, I think that's important because traders are putting capital on these platforms. They want to make sure that there's kind of, you know, they're obviously secure, but they just have been there for time and have had success and are, you know, a good venue to trade. I don't know if you can speak anything to, you know, we've seen like Hyperliquid, for example, has rolled back some trades that were, you know, questionable from, you know, manipulation and oracles and stuff like this. What are your kind of security takes? And yes, 5 years going strong. Congratulations, guys. What are your kind of like security measures? Like, how do you guys think of security from that standpoint?
Yeah, I mean, we are incredibly vigilant as a team. I myself am an options trader by background, so I'll do my best to explain the measures that they take. But, you know, certainly with all of the things we've seen happen of late, we're doing have done like a full security audit of, you know, our bridge providers. We put in extra safety precautions and throttles, things like that, to make sure that we're protecting our users. As far as hyperliquid rolling back trades, they operate as their own chain, so they obviously have the ability to maybe do things like that. We work with Optimism and Conduit, so we would still have like a 7-day challenge period, but that would that would be like the same process for rolling back something on Base or Optimism. And we work with infrastructure providers like Optimism and Conduit that have really battle tested infrastructure, and we're looking at everywhere we can to simplify the stack. We have a V3 that's coming out that will also, I think, like even more greatly improve security and reduce surface area for those types of intrusions. But it's really like probably our biggest priority over any growth or product launch feature, anything like that is really to protect user funds.
Can I ask a question about target audience? I mean, we hear about the strategies, we hear about the complex nature of some of the underlying infrastructure, and there's a lot of finance jargon that can be daunting to people. Who are you guys targeting with this? Is it a sophisticated options trader? Is it the retail person that just wants some exposure to Bitcoin, ETH, hype, whatever? How are you guys looking at audience, and who's the target audience for Derive?
Yeah, so right now our product is pretty geared towards institutional traders, maybe some people on the ProTel, or really a pretty sophisticated player. When you get in and you're looking at option series and you're thinking about margin and offsets, it is not necessarily the most intuitive for someone that's just walking in the door to trading to understand. So it's definitely a more professional and institutional set, and I think a lot of our tooling and features are geared that way. That said, somewhat of our second subset is really builders. So right now we have a builder program. So we have an API broker program. Then you're also able to add builder codes. We have a ton of people building in the Derive ecosystem. Actually, like only a handful of them are live, but we have people doing all kinds of different stuff. We have people doing mobile apps. We have people doing, trading AI agents and LLMs. We have people integrating, short-dated front-end UXs that are much more retail-friendly. People doing structured products, vaults, all different sorts of things that we think, is really, really important for the health of the ecosystem. And right now, I think I actually just went through this before this call, but we have like 25 to 30 individual projects that are building on top of Derive, and like that are actually like registered for the program, and an ever growing number of people that are still in the process of standing things up, scaling, going to market themselves.
I want to talk about this a bit. You have 30 projects building on Derive, so you get to see I guess a wide variety of different people trying to iterate in this agentic finance world, in this on-chain finance world. I mean, we're seeing such a mass influx and interest from institutions and people just accepting blockchain, I think, for what it truly is, and the technology I think you and I have always known it can be. What's most exciting from the 30 teams that are building on top of Derive and using your technology and infrastructure? What are you seeing right now? It's just like, wow, this is super cool, and it's going to innovate and change the world as we know it.
I think to me, it's the agentic trading. I don't think that people really understand like what it means, not just for Derive, but for the entire industry. Really CeFi or DeFi in the derivative space. It's like the tools that I accessed as a trader are now like I can go Claude code it up myself. It's nuts. It kind of turns, your hobbyist trader, like who would have been maybe in the GameStop boom, the crypto kitties of the world, like they could be Jane Street now. Any one of them, all of them.
We all strive to be Jane Street. No, I'm kidding.
Minus the manipulation, but yeah.
Minus the manipulation, yeah, right? I said I wasn't going to throw anybody under the bus. But yeah, it's like anyone can be their own HFT firm. Anyone can express these views, and it really simplifies the options trading experience when you could just speak in plain English and express your views. And I think it's something the industry CeFi or DeFi hasn't seen before. And I think it just blows out the total addressable market that's in front of us.
Dom,
Yeah,
I do have
so-
a quick follow on agentic trading real quick, because we've had hundreds of different interviews with projects and people building agentic trading products. And we just haven't seen that kind of like obvious success case study. And if it's profitable, it then at some point is not profitable and they end up, back where every retail trader is, which is kind of like losing money. Have you seen examples of agentic trading be successful, both maybe in the retail space, and obviously I think I know the answer on the institutional side, but just want to hear how, like, if you've seen those success stories.
Yeah, I mean, I definitely think that AI means that the gaps will close faster in the market, but it also means you can find a new gap faster. So, the strategies work until they don't. And just because it's agent-based doesn't necessarily mean it's going to be publicly consumed. In many cases, we actually have seen the case of people building some of these and thinking they were going to launch a product and then instead launching a fund, which is also great. So we have seen some success there. And I think like there's about infinite strategies you can deploy. So, if a hedging strategy isn't profitable, but you've hedged your position, it's still successful. So, there's all kinds of, different use cases, and they're able to pivot in and out pretty quickly. Yeah, go ahead.
And a follow-up to this too is we know that these institutional grade algorithms, they're few and far in between, and when banks and funds, firms, whatever can get their hands on these, they sign big contracts to get a hold of them. I haven't seen personally a retail version of that created yet. And of course, these institutional grade algorithms are so sophisticated and they just print, when they're doing good. But I haven't yet seen, I guess, any proof of that happening for the retail audience yet. Maybe you have a different take. Are you seeing anyone really start to crack that level of competing with these institutional grade algorithms that most people don't even know about, but a lot of your favorite banks and institutions may be using?
Yeah, right. I guess the one that sticks out, there's one called Ecliptica that is integrated with Drive, or Ecliptica Strata. They're super cool. They have a really fun interface and you can kind of talk to it and express your views. I think like they'll have quite a lot of success. It's early for them, but we're very excited to see, and have gotten a chance to test out their product. That's super cool. You're absolutely right. Like if there's a really good strategy, people do try to keep it. But I think we'll see some of it get democratized, and then, some of the institutional ones are going to just keep getting smarter,
Absolutely. And again, it's like sometimes algorithms do great for a week, month, and maybe they're back tested and work. But when they hit the real market, you need historical proof of these things working. So I think it's a little early to tell, but it'll be exciting to watch. Paula has a question here. Is Derive bridging CeFi and to DeFi? Maybe just touch a little bit on that.
Yeah, so we do have a few things on our roadmap for that. So we're looking into some RWA assets. So I think it makes a lot of sense within our product set. It's another thing that actually like really cracks open the total addressable market of the on-chain protocols, is that, we're not just looking at crypto native assets. We have a short list of, alt assets and DeFi tokens that we're interested to list, to help some treasuries, foundations with hedging and things like that. But we're also looking very heavily at metals, at oil, at, stocks, things like that. And certainly like that will be a part of our roadmap.
Yeah, it's absolutely huge. I mean, and you're right, the TAM kind of expands just infinitely from this point when you start implementing the commodities. How are you guys looking at private equities? I think...
Sorry, before we go to PE, can I ask about commodities real quick? Because back in the day in 2021, it was the dream to be able to trade oil and these kind of assets with derivatives, but it just either the price feeds weren't there, they weren't licensed, that's for sure, because the data providers were definitely not signing those types of agreements. But like, I don't know, is the unlock that the data providers are providing those agreements and we're seeing this explosion of these RWA assets on chain, or is it regulation? Like, what do you think is the big unlock there for like things like commodities?
For things, and it's a really interesting product. Like, I'm actually deep in the weeds scoping some of this stuff. It's a really unique problem because traditional markets have all kinds of levers to ensure orderly markets, like circuit breakers and position limits and OI limits and trade reporting, all of these things, concepts that like don't exist anywhere in DeFi. So, that's kind of like the first, I don't know if it's a hurdle, but first thing to consider is like how DeFi is going to be different. I think for many cases, the success that we've seen on Hyperliquid is the political volatility and the ability to trade these products 24/7 through 65. I think that's really been the huge unlock. I would say the data providers, you're super correct in that they are not willing to provide data, and it kind of makes sense because it does erode their business models a little bit. And market data at some of the traditional exchanges has been very, very expensive historically, whereas in DeFi it's pretty much free. So definitely a different sort of environment. I think one of the biggest unlocks actually on the RWA side is going to be maybe on the lending front, is the ability to borrow against these stocks. It's a little bit hard for me to make out on some of the perp dexes what is just noise over a potential airdrop versus what actually has product market fit. I think Hyperliquid is definitely the best example that you can look at and say, like, the commodities there are consistently at the top of the volume board and showing, real demand. Yeah.
Can I ask a little nuanced question? Because obviously this 24/7 trading, there are periods where the data feed, I guess, coming from the traditional data providers is not, because it's on Sunday night or Sunday afternoon at noon. But I did see a tweet, and I wanted maybe your take on this, that the hype data or the hype price of these commodities versus when they open on the exchanges has actually not deviated too far, that they've been within a certain amount of bips that seem reasonable. Is that like a reasonable take? Or like, what I'm asking is, like, there's this kind of like crypto commodity trader, and then there's like the traditional markets open and then they print their first price. Are those prices deviate a lot? Like, do you see that it being pretty close in? I don't know if you have a thought there.
There's a lot of, and I'm super interested in this topic actually, because I've seen a lot of different implementations. Some people price versus, contract for difference marketplaces or spot marketplaces. Some of them are interpolating forward curves in traditional markets. Whether or not they're supposed to have that data, I don't know. Or how they're getting that. So seemingly, like, there can be some, and I think we will see over time some deviations based on sort of like the finer implementation details that people probably aren't thinking about right now, about how they're doing price banding to last price over the weekend, how they're implementing circuit breakers, how they're I think some protocols increase margin for the bigger and bigger the OI gets. So it's like, I think we will see these deviations, but for now, the market's pretty efficient. There's a lot of big players that are participating on those levels. And in many cases, they're using first price providers, which is, basically you get all the biggest market makers reporting their trade fills, like that is the price, So, yeah.
Question: are you guys? We were talking about agentic finance earlier, and we mentioned this gap compared to the openings. Are you seeing a lot of people come through Derived to actually are about that opportunity, and kind of take some of the margin that you see? And are they doing this via automated strategies?
In some cases, yeah, we have people that are working on vaults that are derived from perps from Hyperliquid, where we have people that are building on-chain prime brokers, which is also like a hugely needed thing in this space to unlock capital efficiency, to take those kind of arbitrage opportunities and lower the cost of capital for everybody. Like, these tools are available in traditional finance, and it's one of the reasons why it gets a little bit harder when you're on chain and you're isolated from the broader sources of liquidity and capital. So we do definitely see that, but I think at each sort of leg up that we have in adoption, it sort of forces, sometimes when things go out of line, and in that case, then, we go out, we source more liquidity, we pull on more market makers, more arbitrageurs, more people become aware, and, then we try to take the next leg up on the option side.
To keep this conversation moving, I just want one last comment on this RWA conversation because it's so fascinating, but I want to get into some of the numbers that Thrive's been doing because growth has been incredible. But how are you guys looking at RWAs and just listings? We mentioned the commodities, maybe some private equities are coming. Just any thoughts on strategy there and any listings we can expect for users?
We're definitely still in the scoping phase and research. I would say I don't have a concrete timeline on when we'll launch these because we want to make sure to, again, do it properly. Like as we've discussed, it actually is super nuanced. There's a lot of critical decisions that can impact, the product success long term. So we're, definitely taking it very seriously, doing a lot of research right now. And think, the options on some of those products are going to be, really big unlock for people. I would say short term, I think we're probably most interested in metals and crude oil, and then followed maybe by some indices and single name stocks. That would probably be the roadmap that I would lay out.
Well, looking forward to it.
Yeah. But it does give us actually like a great chance to flex, the scalability of our system. And, I don't know how long it would take to launch a new market at a traditional exchange, but definitely quite some time, several months. And I think we'll be able to list these, on the order of weeks, days apart, and just keep the launches going. Our biggest bottleneck is going to be liquidity on these things.
Interesting. How do you guys get more liquidity? I guess if you wanted to go and start running out more launches and do this at a faster rate, what's like the strategy there to get more liquidity? Are you reaching out to LPs or like how does that even work?
Yeah, I mean, certainly it's reaching out to LPs. I think that it is really a flywheel where, the first market maker is very, very difficult. And then the second becomes easier and trade kind of begets liquidity. People that were like not going to talk to me 2 years ago, suddenly
Knocking the door down.
Yeah, well, I wouldn't say that, but suddenly they're interested, they're paying attention, they see what we built. I think surviving in the space as well, proving that a protocol is battle tested. Like those things are more important than any incentive that I can offer. Is showing a robust and secure margin system and track record of performance over time.
Love that answer. Let's talk a little bit about growth. You mentioned that you're really focusing on more of the institutional client. And obviously, as someone who's on the forefront of this, on the cutting edge, I'm sure you can see the adoption. I'm curious to get your take on it, the adoption that we're starting to see from institutions of just like using blockchain and this technology to trade. What does that look like for you guys as like a go-to-market customer acquisition? How are you getting in front of these institutions, the people that are going to push meaningful volume through the platform? And how are they, I guess, accepting this kind of new blockchain paradigm that we're seeing unfold?
Yeah, we're definitely seeing a lot more coming on in the institutional space. Again, I think it's great thanks to the likes of like Polymarket, of certainly Hyperliquid is people are forced to not ignore the market of on-chain derivatives. And so they've had to kind of figure it out from a compliance standpoint. We're definitely seeing, bigger and bigger institutions that are coming on or that are interested or that are, taking calls with us and wanting to learn about the product. We've seen some of our biggest months, these last 2 months. March, we printed $3 billion in volume, which was the biggest of all time. I think they said some stat. It was like it took us 4 years to get the first billion of building in this space. So it really is such a huge growth trajectory for us to be able to support this type of volume. So we're always looking to improve capital efficiency, create more institutional tool sets, and allow for these really big players to come online. I filled out a ton of due diligence questionnaires lately on our overall stack and architecture as well, to try to get people really across it.
Incredible growth. I mean, this had about to cross 25 billion in notional volume. You've probably crossed it at this point. And like you mentioned, it took 4 years to do that, hit the first billion. And then like seemingly a year later, you guys have blown that out of the water 25x. What are you attributing this growth to?
I think it's two things. One is, I think, again, like track record and longevity has really just opened the door for us to be able to continue to have these conversations and keep up with people. Some of the people that we're onboarding now are, conversations that are many years in the making, and, finally getting them comfortable with the system and able to, from a compliance standpoint, access our protocol. The other side of that is, I think Coinbase's acquisition of Deribit has really opened up a lot of people's minds about what trading venues they're looking at. We've seen, people somewhat disenfranchised in OTC desks and the bilateral risk that they're taking. So we've been able to see, people that like to come and put their trades up on Drive, because you can pull multiple market makers instead of just the couple that you've onboarded to through ISDAs. You can, see your risk in real time and adjust your position, whenever you want. You can use perps to hedge and adjust as well. You're not reliant on an OTC desk mark prices for the collateral that you have to post. So there's tons of benefits to trading on Derive versus like a bilateral setup, tons of benefits to trading over a centralized exchange where we can give, better fees, margin, things like that.
Yeah, could we touch a little bit on more numbers? Maybe I had this tweet pulled up, which had a lot of those numbers actually highlighted. Here we go. Derive has processed 22.3 billion in notional volume, generated over 7.85 million in revenue, and bought back more than 1.5% of Derive. I think what ties this all together is, okay, these volumes are great, these numbers are great, we're making money. And now where does the token come into play with this, right? Because you have a compelling reason, I think, to get behind the token. Obviously, you probably can't say that for financial reasons or for other reasons. But that being said, could you walk us through some of the numbers and just how the token ties into this whole thing and puts a bow on it?
Yeah, so I guess DRV is the governance token of Derive. There's never been an equity component of Derive. Token holders have full ownership of all the intellectual property through Derive's foundation. We have, I think, in some ways, just like a very clean, simplistic tokenomics model. We actually just had a governance proposal pass that made a few small parameter changes, but basically you can stake DRV to earn, inflationary rewards. There's 100,000 DRV that gets paid out each week to stakers. STDRV holders, control governance, and then we use protocol buybacks to of all the fees collected to buy back the token on the open market, at least on a weekly basis. That number on the buyback just went from 25% to 35% in the last governance proposal. We also really take care to try to highlight the token in anywhere where we're offering best fees. So our best fee tier is reserved for market makers that are holding the token or traders that are holding STDRV. Our best API broker fee shares go to STDRV holders as well. And, we look for ways to incorporate the token into the protocol as we go. But I think that the buybacks is probably just the most meaningful thing a project can do. Like, we're committed to what we're building. We like it, so we're buying it.
Can I ask about the buyback?
Yeah,
about the buybacks. In Galaxy's Q1 quarterly earnings report that they just released, they talked a lot about, or Mike Novogratz talked about reducing their exposure to other L2s and different tokens and consolidating that into Hype. And he specifically quoted the revenue model and that all traders on the platform or Hype holders basically felt like owners. It seems like you guys have done the same thing. And I'm just wondering, like, when you're talking to onboarding new, I guess, users, new partners, new integrations, like, do they feel like the DRV token plays a similar role? And do you see demand for the token from the investment community as like that similar narrative, which has now gotten out? It used to be a crypto thing where we do buyback and burns and stuff like that, but now it seems to be escaping that and going into the broader investment community. I just don't know if you have a take there.
Yeah, I guess as far as interest in the token, so we do think that honestly upside alignment in the project is one of the best ways to work with partners, because it's really hard to come up with an option market making program where you're going to stick somebody to a bunch of KPIs. If they aren't inclined to do it, they're just not going to do it. So it really is one of the best ways to say, like, okay, we have a bunch of incentives in the market making program for quoting better. It's mostly denominated in STDRV at this point. These are all public. Anybody could join. Hit me up if you want to be a market maker on Derive. But I think that really, we have a really impassioned community about the token and about what we've built. We've been in the space for a really long time. We have really long-term community members that, see the work that we put in and the product that we've put out there. We do get a lot of interest, I think, on the OTC side for the token, which we don't typically do, for the most part. But yeah, I would say like there definitely is interest. I can't speak on the price, so certainly.
Of course, yeah.
But it's our token, and we're doing the best we can as contributors to provide value to token holders and really put a product that the token can stand behind.
Something interesting you mentioned is that you said you had a lot of demand on the OTC side, which you typically don't execute. And you mentioned you focus on this institutional client, and holding the token gives, maybe trading discounts on fees or these different fees. I'm wondering, on that OTC side, who's coming looking to OTC tokens? Is it just whales who believe in the platform? Is it a lot of institutions who really want to benefit from those fees and discounts that will help them over time? Because I do think, we're talking here about the token buybacks and how that the alignment aspect, and how this is like the core driver, which is very interesting. But I also think, like, if you have a lot of institutions using this and presence, they can do the math and do the numbers. And hey, if I drive this much volume through the platform over this amount of time, actually holding this amount of tokens will be worthwhile in the long run. So I kind of re-guide that question back to, you have OTC interest. Is this mostly coming from institutions who are kind of looking to have the token in their account so they can benefit from some of the other, fee discounts and benefits that come with it?
I think we get pretty diverse interest in the token. From all over, really. Like, some are funds or even like retail, bigger traders. It isn't necessarily one category of people. I just get, from time to time, I'll get a message like, hey, but no, like no specific thing. I think from our standpoint too, a lot of the people that have been in the market for a long time, like market makers and things like that, since we are incentivizing them with DRV, the goal is like that they get those tokens and they have the alignment and they're able to hit the tiers, because they've been incentivized all along in DRV.
Got it. Okay. Well, this has been a fascinating conversation. These numbers look incredible. We see growth is kind of hockey sticking off the charts here. Closing thoughts. How do you guys keep that going? How do you continue to grow? How do you add more assets that are tradable? What's the vision, I think, going forward here?
We have 5,000 people who have joined the stream, by the way.
Yeah.
Oh my gosh. I'm happy I can only see you two, and I didn't know that until now. Great. No pressure. Yeah, that's great to hear. Thanks everybody for joining. As far as like where do we go from here and how do we keep it going? I think what we've always done is, try to flex the technology to the maximum benefit that we can. Try and achieve economies of scale by utilizing the blockchain technology that's going to help us rival centralized exchanges. That's, low cost to building, that's performant infrastructure, transparency, and really like leveraging the qualities of blockchain that are valuable and not the call it like DeFi Fugazi, memes of why it's useful. And, from there, continuing to build, like we push, our developers are crazy. Like every weekend they're all online. There's updates to the protocol, to the API, to the order book. They're fixing latency. They're pushing products. Like there's constantly something shipping. And I think, we intend to maintain and really up that pace with new assets.
One thing that you just mentioned that I want to touch on is the SEC side. We see a lot of centralized exchanges. Well, firstly, we saw Kraken buy X stocks a while ago, and the Nasdaq partner up with the Nasdaq to start listing some of these assets. We see OKX and the NYSE have a partnership going. Lots of centralized exchanges are kind of getting into this, asset offering. Do you guys have a white label product for some of these centralized exchanges? Are you talking to centralized exchanges to integrate, the options platform or infrastructure that you guys have?
I think what we're building towards is the ability to provide liquidity for any one of those scenarios. So obviously can't disclose like big plans on that front, but certainly we have the infrastructure to provide liquidity backend for any exchange that doesn't want to build an option or origin engine, because when we started, we didn't realize, honestly, like it was going to be really hard. So it is very, very complicated to do. And, in many, many, many cases, it would make sense to, white label or front end to derive, and our infrastructure is well set for that.
So I have to ask, would the revenue coming from that also drive, token value via buybacks and whatnot?
Any revenue that we get, 35% goes towards buybacks. Token holders are the only beneficiary of the intellectual property created by Derive.
Wow, I love this. This has been a fascinating conversation. I think, like I said, I've been following Derive for a while, especially when you guys started picking up traction. Really smart people on the timeline we're talking about. It caught my interest. And after this conversation, I think conviction has only deepened. K-Seth, you're very well spoken. I think you shared a lot of information and did a great job distilling that and breaking it down. I'll quickly go to the chat and I guess pop up one or two questions for you to answer from them. So Crypto Jones asks, any partnerships or integrations you want to mention? I know you touched on a few of those, but last words.
Oh, last words. I'm trying to think of which ones are public. We've had some great, I don't want to like dox anybody. So we've had some great front end. So DreamOS is one. We're huge fans of what they're building. There's another iOS app called ArcX that's, I think, launching soon, very soon, maybe as we speak. So super excited about them, their trajectory and ability, to build towards their own audience. So those are super great. We have some of the prime brokers that SpiceNet, I believe, is public. They're super cool. They're building a ton of infrastructure. Several other people building vaults, but I get really excited when I'm talking to some of these people because some of it is so badly needed infrastructure in the space, and it's really cool to see it come to Derive. We're certainly in a position where we can't build everything that one could build on top of options. So it's very exciting to see these builders come into the space, and I really hope I didn't leave anybody out.
Do you have an ecosystem fund or like any? Are you guys looking to do
an ecosystem account?
Do you got ecosystem account, ecosystem fund? Are you guys looking to like enter joint ventures with any of these people building on top of Derive to kind of let them kind of take the wheel in certain aspects maybe you don't have the time and energy to cover, but want a piece of?
Yeah, we don't have an official program at the moment. We did have for a while a grants program supported by Optimism for being part of the OP stack, but that is currently on hiatus at the moment. But we're always open to partnerships. Like I think one of the best things that we can do to support builders is through co-marketing, is through supporting them through product review, through white glove engineering resources, through I do a lot of testing and giving feedback, things like that. We're certainly always open to bespoke agreements, but we do a bunch of fee shares with builders. We've launched a program where they can also build add on a fee on top as well to monetize. So there's definitely like lots of opportunity for builders on Derive.
Love it. We'll close out with this last question from Crypto Jones. I think it's a great way to end this thing. What will set Derive apart from any other on-chain options platform?
What will set Derive apart? I think it's going to be the product set, the margin system, the order book and RFQ platform. You know, it's really the entire package system together and the way that they all interact. It's very hard to replicate like just one small part of the stack from scratch. And it's also, you know, very difficult to build a robust margin system for options.
There we go. Is there anything we did not cover today that you would like to share with the people, or do we get it all?
Oh man, no, I think that's everything. Really appreciate you guys having me on and everybody joining.
There we go. Well, amazing conversation. We'll chat soon. Maybe we'll come back, get an update once that 25 billion notional volume goes to 100 billion and things are going swimmingly for you guys. So
Yeah.
thanks so much.
Yeah, it's been great. This is fun, guys. Thank you.
See you, K-Set.
See ya.
Awesome conversation.
That was awesome. I have to say, look, the 2021 derivative era was great, and seeing not only Lyra go to Derive or rebrand to Derive and just have success and stick in the game, and then now to get the like a kind of stamp of approval from TradFi world, and like now there's demand for super demand for what they're building, not only their product but demand for on-chain options products. All IP goes to the holders. Like, this is great product. This is an A+ from me. Love it.
Yeah, I mean, I guess the question comes down, and I think they gave a lot of credence to Hyperliquid and what they've done for the space. And I think just the social proof that it's brought for institutions and so much that comes with that in the listings. Thanks for having us. Of course, anytime, come back on. It was a really great conversation. But I think, you know, yeah, there's a big gap in the market here that the options, you know, Derive specifically is looking to kind of capture. And I think once we start seeing some of those metals, you know, K-Set said it comes down to liquidity after all, but I think there's so many assets that people are just hungry to trade, get their hands on, from the commodities to equities to private equities, so on and so forth. There's just TAM is
and having
huge
the
here.
technology like being battle tested for 5 years, and you know, as you mentioned, it's not trivial to build like a margin system and have, you know, not only scalable, you know, contracts, but also ones that are secure and stuff like that. It takes a lot of effort and a lot of very smart people to make those happen. So great moat. I love all the product integrations too. I mean, this is something that we saw really helped Hype grow in the early days, was things like PvP.trade, where everyone all of a sudden was trading on Telegram bots. And it's like, oh, what's the easiest venue to plug into and direct, you know, retail front end user order flow to? And something like Derive, making that focus, making options maybe easier to trade for retail, or using it different ways like hedging, etc. I thought was pretty cool. So good. Yeah, great conversation. 5,000 on the stream. If you're not following at MCG Live, please give us a follow on X. We stream Monday to Friday, and we've done 350 interviews this year. We do not sleep. We've not missed a streaming day in a year. In the last 12 months, we worked very hard. We're backed by Meteora, so shout out Meteora, as well as do you want to give a quick pitch?
Which you cannot trade Derive on, because Derive's not a Solana project, but you can trade any Solana project on trojan.com/@MCG.
Supports the show, guys. It
supports
really
the
helps
show
us
and
out.
gives the best cash back in the game, up to 50% up. No one else is doing that. So, guys, we do appreciate you. We try to get the best guests on here and provide value all the time. Talk about the internet capital markets, the emergence of equities, private equities coming on chain, lots of news, lots of on-chain stuff, what's going on. And we like to get down in the trenches too. So it's been a great call. There's still a few things I want to cover. Let's real quick. We have to like give some context here. Let's look at the Derive token.
Yes, please.
I'll pop that up on the screen. Derive token here. And I have, you know, I don't have the CoinMarketCap or CoinGecko pulled up. This is just their, you know, their base listing via airdrop. But according to Deck Screener, 88.9 million market cap with a 7.5 million fully diluted value. I'm assuming that's a little, I think that's off. That's got to be off. But based on their metrics, I mean, very interesting. 35% of revenues flowing back to the token via buybacks. I do really like their mechanism with, providing tiered discounts based on how much you hold. I could see institutions doing the math and trying to accumulate a meaningful amount to at least, receive that discount. So interesting there. They have a lot of OTC attention. So that's interesting. I would say do the research, guys. We saw a pretty good tweet come out, and I don't have it pulled up anymore. Let me grab it. We saw a really good tweet come out from our friends over at, it's slipping my mind. Just had it pulled up on the stream. They do great. They do great.
Oh,
analytics.
Pine Analytics.
Pine Analytics. There it is. Yeah, just had the Pine Analytics charts up. Go give that a read. I think it gives a really great breakdown. So, but that's derived. That's the token. 35% of revenue going back to the token. IP is held by the people.
A
Seems like they're doing
DCF
a lot.
pod here says that DRV staking emissions down 60%. And I think this is really interesting because back in DeFi kind of derivatives 1.0, the emissions were a large driver of attracting the liquidity for you to have traders trade in size. And it, ended up kind of having this balance where if you had too much emissions, your token performed well, and then kind of people stopped trading, and it kind of had this vicious cycle. But I think these guys have found a good equilibrium here where the emissions are down. And actually what the emissions down even tells us is that they don't need those emissions. The product has found product market fit, and they don't need those emissions to actually drive that liquidity. And I wish I saw this while KSET was on stream, but yes, I think notable that emissions are down 60%.
That's really notable.
solid.
Of course, we see this, with some of the Tau subnets. We see it with what's number 15 on CoinMarketCap. We just covered it the other day. I'm forgetting the name, but we see it with some other platforms where they have these subnets and they have these really big emissions. And yes, they're seemingly doing really good and running a lot, but they make $1 million, but the protocol gives them 5 million in tokens, and it's like, well, they're offering really great discounts. Canton, right? So we saw Canton doing this. We see Tau doing this. Tau lost their biggest subnet not long ago. And I think a lot of people's strife with this was, okay, it looks really great. Sure, these are attracting meaningful people, but it's because they're able to offer super big discounts because they're just basically profiting off of token emissions. So it is really good to see that go down. It's great context, Josh. And of course, Tau lost their biggest subnet. What's the name of it? I forget, but Tau lost their biggest subnet recently as well, which was rough for them. So nonetheless, that's enough on the drive topic. Great conversation. I do want to talk about KO. We had KO on a little while ago, and we know they're doing a lot of stuff with institutions. They just raised, I believe, 16 million, I want to say, 16 million. One of the two. I know those are way off, but from a bunch of notable VCs. They're doing some really cool stuff, and they have a token coming soon. So let's, I don't know, maybe just give that a look and see if we can uncover any alpha here. Of course, we had them on the show not long ago. So announcing KO, the KO utility token. Today, we're excited to announce the KO token, the utility and governance token of the KO protocol. Alongside this, they're introducing the KO Foundation as an off-chain steward of the KO ecosystem. Blah, blah, blah. KO is building the open infrastructure layer for tokenized real-world assets, RWAs, bridging traditional finance and DeFi through a compliant, auditable, and cross-chain architecture with 5 tier 1 institutional funds live and 100 million TVL across 10 plus blockchains. KO is positioned at the center of the $30 trillion tokenized asset opportunity. Look, focusing back into RWAs, I mean, you see it. Again, we talk about the raise Kyle just had and some of the great investors that they had interested in this and people were working with. Great conversation with Kyle. You should go check it out if you guys haven't seen it. But man, people are crawling to get their hands on the infrastructure here for RWAs. We're seeing the volumes come on chain. We're seeing the value you can provide to have liquid markets, 24/7 liquid markets for RWAs and assets, like private equities that are typically gated. Gated from non-US citizens, gated from, non-accredited investors. But KO's been doing this, and we see these big raises, and I think we're going to see a lot more of it happening as people who are behind on the infrastructure side go and find these projects that have been building for years and years, and they have the infrastructure in place and are kind of taking on this big wave of demand and interest. And so again, institutions are interested and they're clawing to get their hands on this. Not sure what this means for the token, but it goes back to the question: how can you guys get your hands on the, you know, the underlying infrastructure for some of the stuff that's actually popping out, these RWAs? KO being one of those. So let's see. What is KO? KO was incubated by Laser Digital. Don't need to get into that. I just want to hear about the token. What KO has built and is building. Significant milestones. Institutional RW takes the tokenization. 100 million of trading value on the platform, offering exposure to funds managed by BlackRock, Brevin Howard's, Hamilton Lane, Laser Digital, and an upcoming partnership with Mabdullah Capital. Cross-chain by default, blah, blah, blah. Compliance on chain, DeFi integrations, future integrations with tier 1 DeFi platforms to enable composability, maybe a Camino integration there or something. Cash retail project targeting launch in Q2. Okay, this is maybe a new project here. Let's talk about this. Cash retail product targeting launch in Q2 20. Cash is being built specifically for broad accessibility, democratized access to RWA yield. Okay, so it's a yield product. The tokenized asset market is entering a critical inflection point. Regulatory frameworks are maturing, institutional demand is growing, and the infrastructure question, who provides the rails, is being settled now. KO enters this moment with a distinct advantage: the backing of sovereign capital, global macro managers, and tier 1 financial institutions who've chosen to build alongside the protocol, not merely observe it. Man, the issue is right now people are just scared of DeFi. Like, a lot of people are opting to take no yield rather than take, you know, whatever yield they're getting on these DeFi platforms, just because of the hacks we've seen. I mean, 2026 alone has had so many hacks of scale. I mean, Aave obviously being a recent one, and so many more.
Aave wasn't a protocol level hack. It was more of a depositing the, you know, compromised asset for a clean asset or an asset that was not compromised and then withdrawing it. The one thing I will say though is that they should have had limits and you know, rate limiting on that. Like, hey, if you want to withdraw 200 million from Aave, you need to wait a few days for to be KYC'd or something like that. Like, at that
I do
size.
agree, and I think we need this stuff. Like, you know, I understand the thesis behind crypto is decentralized, democratized, but I mean, some of these safeguards, there's a reason they have them in place in traditional finance. And so, like, yes, it's nice to be able to withdraw hundreds of millions of dollars whenever you want. But, you know, and I know it's like people get mad when they go to the bank, they try to withdraw, and the banks ask them all these questions, and why do you need to know where my money's going? And yeah, it's annoying, but they have these safeguards for a reason.
There's literally 10 entities in the world that are using crypto right now that would withdraw that kind of size. And any one of those 10 entities minus one would be fine with having a 2-day KYC check. Right?
And hopefully in direct communication with these protocols.
Right, of course. And they know that everyone else at that size is also doing a KYC check to ensure the health of the overall system. There's only one entity that I can think of that's moving that kind of size that would not want a KYC check, and it's the one that keeps running these big, you know, exploits. So anyways, I digress, but it is true. I mean, guys, you know, it is true. I'm all for decentralization. I love it, but man, I've always thought a long time and stuff. Even the protocols I worked on, right? Like, there were large trades going through at 3 a.m. on a Wednesday, and I'm looking at the thing like, oh my gosh, what's going on here? And, you know, it would be nice to have some sort of check and balance in place there.
Yeah, and I'm sure they have systems that flag this kind of stuff, so they can look into it. But like,
man, I mean,
you don't think so?
Yeah. Well, you know, it flag the systems are like stock on chain and like these other X accounts that are flagging it. But yeah, I don't know. I actually don't know. I've never used Aave, but I do know Aave has an institutional version. They used to call it Aave Arc, which was more gated and I think was KYC only. But anyways, it's just, yeah.
Yeah. Anyways, the KO token, community and liquidity incentives, 37.5. Okay. That's a pretty large amount. Early investors, 31%. That's a pretty large amount. Foundation team, so you can call it the same thing. 28% between the team. Pre-TGE sale, so it looks like they sold 33.5% of the token. Of course, I'm sure this recent VC deal that they got is part token, part equity structure. You know, that's how a lot of these people do it. So, okay, interesting tokenomics. Just wanted to kind of highlight this because, okay, here's the vesting schedule as well. So early investors, pre-TG team.
Okay, the old classic vesting schedule.
Yeah, this is like a classic token launch.
What's it raising at?
I don't. Well, I don't think they're raising anymore.
Or, well, are they not doing a raise? They're not.
Are they? Or is this just airdrops? I'm not sure. Here, let's see. Community liquidity incentives, early investors, foundation team, pre-TG sale. Okay, there's a pre-TG sale. I don't know. I'm sure it's in here somewhere actually, but I don't know. Just watching it, I don't know if this is actionable at all. But we saw they raised recently, and now they're coming in and dropping the token, and I do think KO's doing pretty cool stuff. Nonetheless, another thing to pay attention to is Tessera, friends of the show. We know they're deep in the private equities. I made a bag off of SpaceX on Tessera. I mean, they gave it.
Oh my
to me
gosh,
at-
I'm talking to a SpaceX private equity investor. That's amazing.
Yeah, well, actually, I've sold my SpaceX. I will say. I mean, this repricing to a 1.75 trillion valuation, I just feel like, hey, I'll take my P and walk away. 800 billion to 1.75 trillion in a pretty short period of time is more than enough for one of the largest or the largest company to IPO in history. So, but nonetheless, I digress. They're dropping Kalshi soon. So Kalshi closed its Series C at a 22 billion valuation. Tessera is now launching its C Kalshi with 3 tiers: one at 12 billion, one at 13 billion, one at 14 billion. I think whichever tier you're getting, you're probably happy to get this. So, just like I said, when Tessera launched at 800 billion value, or just when SpaceX launched at 800 billion valuation, and they had already, I think, floated rumors of IPOing it. Like at that point, it was a trillion, 250 billion, I believe. So 1.25 trillion. And now it's since risen. But same situation here. I mean, you're literally just getting a discount, assuming on-chain reprices. Might take a few days, but people are going to, buy an undervalued asset. So it's what happened with SpaceX, probably happens here. I would just say, take note of this. Why not? Go check your eligibility. And if you generate 5,000 in trading volume on SpaceX, you can qualify for, I guess, one of these, which really shouldn't be that hard to do. I mean, even if I'm not sure what their fees are. It's called 2%, one in, one out. It's 1,000, or I mean, you don't spend a lot of money just generating those trading fees if you really wanted to, and you could, get some pretty easy upside. So pay attention to this. Interesting strategy there. Let's watch this video. Why not? Here, I'm going to stop sharing and reshare. As we know, my screen be bugging. All right. Just watch this video. I think this one is actionable, guys. That's why I bring it up.
Series C funding round. Kalshi has secured a valuation of $22 billion in an ongoing financing round.
It is the fastest growing asset class and exchange in the US today. So the ceiling, I mean, I think this can rival the stock market in 5 to 10 years.
I don't know about that. Nonetheless, it's probably a good trade. Shout out to Sarah. I do love what Tessera's doing. They're team sharp. Had a lot of conversations with them. They're good. Sorry, you took a deep breath there. I thought you were gonna start.
No, I was laughing at the bigger than the stock market comment. I think that was crazy. That was funny.
So we know this guy's got a position in Kalshi, but that guy's bag working is what he's doing. Nonetheless, guys, hopefully soon. No, let me know. All I'm saying, OKX guys has been making headways. Like if there's a team, centralized exchange, I'd really love to work with right now. It's probably OKX. From what they're doing with the NYSE parent company buying 10% of OKX at a $25 billion valuation, from their work they're doing with BlackRock. Yeah, I know BlackRock, scary, but nonetheless, doing work with BlackRock. And now they're like pioneering this APP with Solana and a bunch of other partners. I just want to kind of read about it. We don't need to get deep into it, but let's just get the general thinking here. What APP is by OKX. Introducing APP, the open standard for agentic commerce. Agents can now do retail business, not just make payments. Today we publish APP, the new open standard defining how agents communicate and negotiate, pay for services, and pay each other. For the first time, agents can now move beyond simple payments and into full-scale commerce, completing the full spectrum of tasks, including drafting quotes, hiring specialists, escrow funds, resolving disputes, and much more. With escrow and dispute resolution coming soon, the full commerce lifecycle for the first time. Not going to read into this, but APP is designed to enable new capabilities for agents in 3 ways. Agents operate and communicate autonomously across the full commerce lifecycle. Agents can pay each other as well as paying for services. Agents can pay in different ways, such as upfront, top up, and deduct, or via plans. Okay. top up and deduct, or via plans. I'm wondering if this is using X402 or, you know, ERC 8000. Like, I'm wondering how they're routing these payments. Obviously, it's on chain something. I wonder if they made a whole new payment system, or if this is kind of utilizing what's already out there. How APP improves on existing agentic payment solutions. Oh, geez, here might be my answer here. What agents can do: business quotes, escrow, meter, settle, dispute, agent to agent, existing payments protocol, pay for a servant, agent to agent service. Okay. Who agents can transact with: other agents, hire specialists, escrow funds, release on verified delivery. What they can do now is API and servers. What happens when something goes wrong? No recourse. Okay, so this is the most interesting thing, I guess. What happens when something goes wrong if your agent just goes haywire and starts paying all these people, making bad transactions? You can dispute the resolution is built in. Funds stay in escrow until delivery is verified. So this is making it a little more secure. I think this was like the big scary thing for agents, having full control over payments in like a wallet. Which chains can adopt a standard? Any chain APP is the open spec. Any ecosystem can implement it. Okay, so it looks like this is kind of their own twist on X402 with maybe some different mechanisms here. But yeah, launch partners and ecosystem members include AWS, Alibaba, Ethereum Foundation, Solana, Base, Sui, Optimism, Aptos, Pharos, Paxos, Uniswap, MoonPay, Nansen, Kite, Xeron, AltLayer, MeshPay, Surf, blah, 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 OG. Wow, lots of launch partners. This is pretty cool. I don't normally cover centralized exchange stuff unless it's like, you know, directly impacting us. But I think this is kind of, you know, we talk about agentic payment all the time. So this is pretty interesting. Any comment on this, Josh? Are they trying to compete with X402 here? Nope.
Yeah, probably. But yes, again, still volumes are small. We need to break out X402 like payments product. Something that's like really exciting and actually gets mind share beyond the protocol itself.
It starts here with a little more guardrails to begin with. Start with guardrails. Maybe after time, once things kind of get ironed out, you remove a bit of the guardrails. But I do like that kind of feature that OKX is doing here. Josh, you might have saw it. Altitude just raised $18 million. Obviously, Altitude is an on-chain banking system, banking app. Oh, can you hear the volume?
Yeah, play that.
Banking is necessary, but banks are not.
And I'm a big believer in what stablecoins can do.
Stablecoins are so real.
The greatest revolution in financial technology.
We're just at the beginning of the tokenization of all assets.
Every business bank is racing to be the best software layer on top of the bank. We're not in that race. A financial OS built on stablecoin infrastructure.
Dude, they're so sick. This video is awesome. Wow, huge. Well, they just raised 18 million, led by some really great investors. And Josh, I'll let you speak on this because Josh is implementing Altitude into the MCG business for payments as a bank account. We've had conversations with the team. They're going to be in Miami, but really impressive stuff. How are you seeing this? Just any words on banking kind of coming on chain and how easy it is to use stable coins as payments rather than the rigorous process we know so well?
People who have been building in crypto a long time remember Silvergate Bank, Silicon Valley Bank, who were essentially shut down for being crypto startup friendly banks. And they ended up having a bank run because they were taking user or project deposits or customer deposits and investing that into basically high yield bonds, which were riskier than the risk-free bond rate or the U.S. Treasury bond rate. And when those U.S. Treasury bond rates went up, they essentially competed and those bond prices came down, and it caused basically an asset backing run on the bank. And then the government shut them down, and people argue that could the government have bailed them out? Maybe, but they shut them down, leaving a hole in the banking system for crypto native companies. And what I think this really solves for is, yes, you get a US dollar bank account that you can do business, accept invoices and payments in US dollars. but it gives you that optionality to also pay your contractors and do business in stable coins, make sure your treasury is staked so it's earning some sort of yield. So I think this is very needed, and having the ability to have like your assets or your treasury, your business treasury in stable coins, I think is really what you want in one place, but it's really attractive. So yeah, I mean, I like it. This is a new wave of banking that's kind of like a neobank. And I think these are OCC charters and updates to regulation that they're allowing this. So really excited about
Yeah,
this.
I mean, it's directionally correct. We're only seeing more and more people come and pay with stable coins, use QR, bring their businesses on chain. So yeah, led by, I mean, just look at the people in this round. This round was led by Solana Ventures. Shout out Solana. Deepening our partnership that goes back to when we launched Squads in 2021 with support from Coinbase Venture, Han Ventures, L1D, XYZ, Collab Currency, Jump is in here, Robot Ventures. I mean, this is a stacked list. They weren't just letting anyone into this round.
No, and it seems like Squad was this multi-sig wallet product. So it's kind of like they built this infrastructure out first, and then they said, hey, what else can this be used for? People are using it as kind of like a bank, and we'll just create a bank. And I guess now you can get really easy bank accounts and banking charters, which again, 2 years ago was not really possible. So this is largely a change in the regulatory environment more than anything.
Yep. Last thing I have, just because it's in the title, we already covered it briefly, but let's get the whole Robinhood versus Hyperliquid thesis, because we saw some revenues looking really good for Hyperliquid, and it begs the question. Josh, you've read through this. Do you have any takes on this tweet that went out, or should I just read through it right now for everybody?
Go for read out. I have 3 data points on this chart that are really important.
Okay, well, then I'll cover the chart after I read the tweet then. Robinhood versus Hyperliquid Q1 results. Clear, cynical downtrend in crypto trading. No surprise here. Robinhood crypto revenue fell to 134 million. That's nearly 40% down quarter on quarter, while Hyperliquid crypto revenue fell 179 million, which is 31% quarter on quarter. Now, this is where it gets interesting. Still, Hyperliquid's crypto revenue was higher than Robinhood's crypto line, while its RWA revenue grew 454%. 454%. Now, again, a quarter ago, they had almost no RWA presence. So, but still, 454% growth quarter on quarter is massive. Users also grew 30% quarter on quarter. Wow. Users grew 30%. Really, that goes to show they're tapping into a whole new market with this RWA, and people clearly have an appetite for it. Users also grew 29.6% quarter on quarter to 1.19 million versus Robinhood funded customers up roughly 1.5% quarter on quarter. I think that's, look, not great for Robinhood, but not they're not, not terrible.
Well, it's on a big base,
Hyperliquid.
right? It's on a 27 million funded customers versus 1.19 million.
Yeah.
A lot easier to acquire 100K customers if you have 1 million and have a big percent over quarter increase versus, yeah.
Good notes, Josh. Yeah. Hype's discount to TradFi comp. And this is the question we keep going back to. It's the question we brought up earlier with Craft. Why are crypto projects doing insane revenue but trading at a discount to what their counterparty equity companies would be? Like, if this was listed or IPO'd, if Hype was IPO'd, it would probably be trading much higher than it is today. And it seems that just because it's crypto, solely because it's crypto or has a token, it is trading much below its fair value, which is like the question we're trying to crack here. And I think we come around at some point. So, you want to invest in these assets while they're undervalued. But Hype's discount to TradFi comps has largely been cynical discounts on crypto-linked cash flow. Yes. But with RWA now 30% of volume, HIP4 adding binary outcomes and revenue volatility already rough in the line with Robinhood through the slowdown, that discount looks less justified. At 193.3 million of Q1 protocol income versus Robinhood's 350 million of net income, Hype looks incredibly cheap at 9.5 billion circulating market cap against Hood's 74 billion. So again, let's break this down. A little over half of what Robinhood's revenue is what Hype is doing. So Hype's doing about half of Robinhood's revenue right now, despite being at about a $10 billion market cap compared to Robinhood at a $70 billion market cap, right? There's a 7x discrepancy when there's a 2x discrepancy in price. This is, I think, there's not much you can take from this other than bull case for Hyperliquid, I think. I'm still bullish Robinhood too. I think Robinhood's trading pretty extreme to earnings, but it's a very high growth company in my opinion. So
Yeah, I, again, listen to the Galaxy Digital Q1 call. Go back and listen to it because they talk about Galaxy One, which is basically Galaxy's competitor, retail front end competitor to something like Hood. Some of the key things that they're talking about there is using your crypto asset as essentially like collateral against like things like a mortgage and other margin either on trading, but also talked a lot about mortgages on the platform. I just think Robinhood's going to see a lot of competition. This super app narrative from the SEC is going to have a long tail of competitors. Robinhood's actually benefited, in my opinion, from a little bit of regulatory capture over the last years because it's been harder to break into this space, but now you're seeing them all come for it. That's just my take. I think on the take rate, real quick, I'll get your take on that in a second, but on the take rate, you look at the competitiveness of on-chain trading at 3 bips for perps. I mean, I'm pretty sure the 20 bips for Robinhood is more spot trading, which makes sense. Versus perps is very competitive, but I wonder if you see more margin compression from like a Robinhood because they have to compete with these other super apps that are coming in. But yeah, Dom, what do you think?
Well, it'll also be interesting, kind of on that note, to see how the new regulations affect the new day trading regulations affect Robinhood. I think Robinhood's very well positioned because they're like the known, they're the first mover. They're what people know. They're what people kind of know and love today. And it's like the first place people go to day trade. And I think we'll see how the new regulations affect that platform. And I guess next quarter will be really a good way to see growth in revenues, quarterly and, historically. So I do still think Robinhood's just established enough to be like the winner. I don't think anyone's really a lot of competition is one thing, but I just don't see who can topple Robinhood. And I also think Vlad, their founder, is just very innovation friendly. He's looking into the private equities. I mean, he's doing crypto. Like, he was doing crypto before it was cool. He's doing private equities before it's cool. And I do think they continue to grow and branch out into different verticals that are going to just open up TAM for Robinhood in such a big way. It's trading at a pretty high multiple, and Hyperliquid, I think, is not in this case. So I think 2 things can be true. I think both of them can be great trades. I think we're just heading more so in this direction of, financialized applications and less people going through their banks or brokers and leaning towards something like a Hyperliquid or a Robinhood. I think Robinhood's much more accessible than Hyperliquid. That's where Robinhood has an edge. If Hyperliquid could make themselves super accessible, have a mobile app,
they don't need to. I think Hyperliquid can be kind of like Derive, just talked about all the integrations. They don't need to necessarily own the front end. They're just where the trades are routed, right? And we see Phantom chose them over something Solana native like the Jupiter perps. And, now that these super apps are allowed to actually probably offer things like Hype perps, I do think there's a lot of upside in Hyperliquid just saying, hey, plug your APIs in. You guys earn a bit of there's a built-in revenue model because if you earn the referral traffic, you get a position or percentage of the fees. Like, to me, I see all these neobanks allowing perps trading. They're going to plug into something like maybe Hyperliquid as a venue for that. So you don't need to own the front end in things like Hyperliquid, Derive, etc.
That's a good point. But as this thing dips, I mean, same kind of targets, low, 35 and below has been like just DCA for Hyperliquid.
Yeah.
Nonetheless, stands as one of the top revenue generators.
It's a good discussion because like we're seeing this seismic shift in like I don't want to say neobanking, but like these kind of fintech apps that were out there traditionally are now competing with a new wave of fintech apps that are coming that were more crypto native and offer crypto native products and infrastructure. And I don't know, these worlds are just so coming together. That is,
this is true.
Robinhood used to think like the Coinbase app didn't compete with the Robinhood app, but you know what? Now Coinbase has trading of equities and stuff like that. Like, do they compete now?
And the only way to trade private equities is crypto rails. So it's totally convergence.
So it's very interesting.
Robinhood's down 15% on the day. Did not like the earnings reports. Again, remember I was telling you, I want this gold box for Robinhood. If you get me back down there into sub 50 territory, I'm a pretty aggressive buyer of Robinhood. Happy that it's pulling back because I didn't get filled on much up here at all. So this is where I wanted. But yeah, bullish Hyperliquid, continuing to DCA that, bullish Robinhood as well. I think both things can be true. So good conversation to have. Nonetheless, let's see what the chat's got. Gonna try to wrap it today. We've had some really good interviews and not gonna keep you guys too long. Printer eco dumping today. Hopefully chill isn't getting wrecked. Yeah. Guys, ebbs and flows of this market. I would not be holding a lot of stuff for a long time.
Printer
right now.
was going good until it wasn't, to be fair. So I don't know if Printer, maybe they have a season 2 with this airdrop or not, but I definitely warned that crime was starting to happen on Printer, and I'll go get that clip because I do remember saying that.
Yep. I'm not a dip buyer for what it's worth. Outside of that, Josh, anything you want to cover? I mean, crypto, I guess I'll just give you guys a quick macro look and leave you with this, but markets in general in crypto are okay. Yeah, we can touch on it for a sec.
Yeah, go ahead.
Market's pulling back a little bit. Thesis still stands. Probably anytime you get in this range, I think it's probably a good value for Bitcoin, of course. Lagging compared to the rest of the market. Same goes for ETH. Same goes for Solana. Solana underperforming massively right now, but I'm holding tight onto my Solana. We got hype. We saw this chart a second ago. Bitenzer one we're not really interested in anymore after the subnet situation, I think. Outside of that, not going to get into anything else. Let's check equities. All-time highs for NASDAQ. We're down today, but whatever, nothing meaningful. Again, I've thought, and I think Josh has shared the same opinion. Yesterday, he went down and broke it down, but these things just seem overheated to me. They really do. So equities may be overheated. I would not be buying up here. Stocks, NVIDIA, of course, ripped the other day to all-time highs. I mean, NVIDIA's a great long-term bet. Again, though, feels overheated. Tesla pulling back into ranges where I kind of circled down, of course, with the crypto market on this. Circle is going to be a great bet, I think, if you get down sub, back into the lows of these ranges, sub 65, basically. Outside of that, not too much.
Where's throw open that Galaxy? Got to throw open that Galaxy.
Also, probably looking pretty brutal here.
Where's that?
Galaxy. Here we are.
There. It's up. Yeah.
Okay. It's actually had a really, really nice pump, but again,
really nice move. They have bought back 60 million of their $200 million buyback program that's currently underway. So another, call it 140 million buybacks. Again, go listen to quarter one call. Mike Novogratz, guys, remember the name. He's been doing this since 2018. They have billions of dollars in crypto assets. A couple billion, $3 billion of cash on their balance sheet. Literally $5 billion of their $5 or $10 billion market cap is literally hard net asset value assets. They they scaled their asset management business from about $1 billion last year to 18 billion now. And that's largely because of the asset treasuries. And they now earn $60 million profit and free cash flow from that business in 12 months. They built a really great business there. Again, the data center Helios full build out is a $15 billion asset. Phase 1 is now complete and handed over to CoreWeave. And they're looking for a tenant who they say they have discussions with multi-trillion-dollar hyperscalers, which are like 3 companies. That's Google, Microsoft, or
so
Amazon.
Josh, we gotta talk about this because you always talk about Galaxy. The numbers are great. What they're doing is fantastic. Undeniably, we talked about how they rose up to $18 billion in assets on, treasury management or whatever it is. Why is it doing so? Why is it performing so bad over time? Is it just a crypto curse? It's involved with crypto, and so it just people are scared of it, or why is it trade so bad?
I mean, if you go to look at the price history back to the TSX on a weekly time frame, it went from $4 to $40 at that peak. So that November peak, it had ran for 2 years. It was the best performing asset in the world for like 3 years. So I wouldn't say it's not necessarily performed poorly over. Let's see, is there a trading view one where it aggregates the data there?
Yeah, I'm looking for the TSX. Okay. Okay, this one.
Yeah. So I mean, like, I wouldn't say perform poorly. I mean, this is again one of the best performing assets going back from the last bear market to forget all that noise back there. That's
That was
an RTO, but
okay.
So that was a different symbol. But look at this. So from 2024, again, for what is that? $4 there to $40.
I mean, even less.
I wouldn't say that was bad performance. That's an amazing outperformance. This pullback, though, is largely due to the broader crypto market. Again, their business is very exposed to crypto, both on volume base, but also the numbers they're reporting are based on the depreciation of those crypto assets or the appreciation of those crypto assets. Now, one thing Mike said is that he says the revenues from their crypto business are now stabilizing, although the market is down, which he's very excited about. And he says, if we get a few more quarters like this, so the end of next year, he'll say, all right, our crypto business now decoupled from the asset prices themselves, which is exciting. And they're cash flowing, which is great. But really the challenge here is that you have a AI story and a crypto story in one. And for a lot of people who are the AI story, they won't touch this asset, I think, because of the crypto business. It's not just part of the thesis. So one thing they've talked about in the past is actually spinning out the AI business under Galaxy as a separate asset, which can then be kind of a pure play. So I think there are some of those kind of aspects. And Mike even mentioned that they're eyeing that, which would be very bullish because then the data center business would be based on its peers, their peers, which IREN, Mara, you name it, they all trade at huge premiums on the megawatts they have. So yeah, but at the end of the day, they built one of the biggest data centers in the US in like a year and a half. And it's all comes down to execution and owning the power contracts, which they have. So I just think the market just doesn't realize it because it takes time, right? But that's our upside. So
there you go. Yeah, Circle. We mentioned Circle a little earlier, Abe. Yeah, I think Circle is a great trade if you get back into these lower bands here of this range. Probably a good DCA. Again, I mean, it's a bet on stable coins, which is undeniably growing at massive rates. Again, like Circle IPO did really, really well for the first week or two out of IPO. And then it's kind of since corrected, but this could be the post IPO dump. And then where it kind of finds a floor, stabilizes, and then continues. Stablecoin business is huge. Circle's like the leader. I mean, I guess you could say
all crypto charts kind of look like this though. If you go back to like this is the Galaxy hit the highs when Circle hit the highs, basically.
When was this? November? Yeah.
Yeah. So
okay, well,
I don't think any of them are necessarily immune to the broader crypto.
This was Galaxy all-time highs, November.
Go back to it. I would have to.
Yeah. So Galaxy.
No, it goes November. Yeah, on the left there, further to the left. Yeah, that's the all-time high in November. So, anyways, everything's been down since then. So, yeah.
Yep. So nonetheless, but I do think Circle's again, yes, same with Galaxy. It's kind of got this crypto aspect, but nonetheless, I think revenues and numbers and opportunities never been better. So yeah. I like Circle, Abe. I know you're a big Circle supporter. Let's jump on chain. We got like 5-10 minutes to do this. Swarms has been pumping. I don't know what this is. Again, like another day. It's just like it's been pumping.
Those are quite the oscillation candles there. I don't think I've seen it. Some bots got a hold of this thing.
This is 3.6 million in volume. I don't think they have trading fees though. See, like Swarms is missing out on that. I don't know why they're still on Pump Fund. Like this is prior to creator fees. So if I was them, I would have relaunched on Meteora a while ago. Again, I could be wrong about this, but I don't think they're earning any fees from this trading. 3.6 million in trading volume would have generated them a very nice amount, $60-something thousand in trading fees at 2%. Of course, I don't keep all of that, but nonetheless, Swarms is looking interesting. One to watch. Cled's up a little bit off after a pump the other day from 12 mil to 16 since pulling back a little bit. Orgos had some interesting price action as well. We announced they were on the show, like literally here. I don't know if this is people expecting them to announce something on MCG, but pumped significantly from 1.6 million to 2.6 million. Since then, it's pulled back a little bit. Outside of that, nothing worth noting. Either is obviously one, that's pumped to all-time highs. We have them coming on tomorrow. Tomorrow or Friday? Tomorrow. Yeah, we got them coming on tomorrow to talk a bit about their product. So tune in for that. Blocks is using the new Ace equity round, safe rounds, actually looking really good. We figured out how this works a little better the other day, and this looks more interesting and compelling than it did when we first looked at it. Cards, of course, top revenue generating protocol. It's on a pullback. I think this DCA opportunity, I think this becomes a DCA opportunity. We've had a long time to bottom out, establish the floor. Economics look better here than they did all the way up here. This was purely hype driven. This is purely economics driven. Question still becomes, where does the token play a meaningful role into this? If they start introducing some level of buybacks, it's probably undervalued here. So watching cards, they've just been crushing it. Fold is the one we had on the other day. We had Fold on, which is the peptide stuff. And this pumped very nicely out of that conversation. Holy cow. I mean,
yeah,
so
I don't
we
know
had
if you saw this earlier. It was like we had him at 500K to 3 mil.
We had him around here. He was disappointed with his interview. He thought he was not well spoken. I think he did just fine explaining it. But this pumped up after that to 2.3 million. Crazy. 1.2 million in volume. These peptide companies coming on chain, I think it's cool. It's a huge narrative and it's such a big business, but I just don't know if any of them really are tying a meaningful value to the token. Like, okay, they're doing peptide research. Maybe they find a recipe and they go and create a sick peptide. But if they go and sell that to some private equity firm who's buying peptides or whoever, big pharma, I don't think the token holders will ever see any of that. So like, that's my only issue with these, not with Fold specifically.
Idea coins.
Yeah. They're idea coins, and you can't really tie a lot of value to those. So anything I'm missing, Josh, that I should cover? Come on tomorrow, NYX. We're so busy this week. We got a lot to do. So come on another day and talk to us about
toss in an AOL chart there. That's United. Well, yeah, let's check it on AOL here.
Seems people aren't super confident in V3 based on the chart.
Yeah.
Okay, United is.
See there, United. Let's see a couple of the tokens on their platform.
That is.
You see,
here it is.
USA as yeah.
I'm assuming this is it. Launched not too long ago, going up only 791K in volume, 790K market cap.
Oh man, this
that's interesting. 791K in volume, 790K market cap.
Go to 1 minute. So what time did they come on at? They came on at 12:30.
So
oh wow, this launched right at 12:30.
Okay. So this launched around when they were on then. Yeah, about an hour ago. Okay, well, it's doing well. You guys know me, I'm not a meme guy. So like I know for a fact this isn't gonna last. Like, together we shall unite the memes. Yeah, like I can tell you, I can guarantee you this is not gonna last. Just because these memes do not last right now in this market. Nothing is, especially not one with a lot of cultural relevance. So, good for them on trying, but I wouldn't be bidding this. And it's not a diss. I'm just not a meme guy, and I don't think the market is really accepting of this right now. So,
hey, a runner off the stream. I do like that, but yes, you gotta keep it. Yeah, if memes aren't your thing, if you're not into losing it all, then don't trade these things. But if you are, go for it. I mean, all power to you.
Yep. All right, y'all boys. 5,265 of y'all tuned in today. We appreciate it as always. Guys, make sure you're following MCG. We try to bring value every day, bringing great founders on, telling the stories, highlighting great projects, exposing the shit ones, the meanies. You guys can always follow us. We do like 2 different interviews a day, sometimes 3, 4, and 5. Our schedule's looking great. Tomorrow we got Either Way coming on. Let me just get a quick little schedule look here, boys. Because we are absolutely stacked prior to Consensus Accelerate next week, which we will be doing a lot of live content from. So if you want to see what's going on there, tune in. Yeah, tomorrow is absolutely packed. We got Either Way coming on, who we just showed you the chart, absolutely making headways. Blocks API coming on, talking about their new ACE round. Really two interesting ones. Hermes is the most popular open source GitHub repo right now. Hermes OS is coming on, talking about that. Litcoin was one. The people wanted, and then we got Orgo. Spencer coming on. A lot of people want to hear from Orgo. Thursday's another banger. And then Friday, we got P coming on. I don't know why this says Woon or Robot Money. Neither of those two are coming on, but we do have P coming on, and we do have OGP coming on, OPG coming on as well, which is a new launch. Was very successful. So stack schedule, guys, please keep up. Make sure you shoot us a follow. We're doing our best here in this market, riding it out. Remember, if you want to trade on Solana, you can do so with Trojan by scanning the QR code in the bottom left corner, or by visiting us at trojan.com/@MCG. Again, this will get you up to 50% cash back, which is the best in the industry, better than anywhere else you're going to find. So we always want to advocate for traders keeping and making as much money as possible. And remember, the tip I gave you today, guys, I'm looking at a screenshot that says someone received 2,350 gold for a 93-day streak. Every day you trade, you create a streak and you earn gold. You can put that gold into jackpots. Chill, our co-host, who's been off this week for personal reasons, has won 2 jackpots. So he's made thousands of dollars just doing this. If you just get a little streak going, it adds up really quickly. So that's a little cheat code. If you're on Trojan today and you want to get a bunch of gold, just make a swap every day. Hit that streak. That's what I've been doing. It's been stacking up. I'm about to win a jackpot. So, all right, Josh, anything you want to say to the people?
Not financial advice. Make your own decisions. Be safe out there, guys. Yeah.
See you, boys.